We thank you and bless you in Jesus' name. Thank you. My name is Mrs. Broker. I'm the Health Secretary of the Insurance Institute of Kenya. And I want to question each and every one of you. At this point, I will call upon our Deputy Director, Madam Alice Roge, to take us through. Alice, karibu.
Good morning, everyone. My name is ACI Aris Muthoni Joroge. I'm the Deputy Director of the Insurance Institute of Kenya. I also wish to take this opportunity to welcome all our distinguished guests today, all our professionals, the affiliates, and our guests from all over the region in Africa who have logged in today. I am excited for this day since it's a game changer for us. It is the first virtual conference that we are having in the IIK fraternity. It is the 35th conference that the IIK is holding. We are all familiar with the organization's strategy that is managing strategy, which is synonymous with managing change. And when a company changes its strategy, its people must do things differently. So it's time for us, with the impact of the COVID-19, as an industry, to think of how we are going to do things differently. And we could not come up as an institute with a better theme than resilience and thriving amid this COVID-19. And as an institute, we asked ourselves the question, how can the insurance industry survive optimally? And we came up with this theme bearing in mind what we are all going through as a country, as a region, and as the whole world, and how the pandemic has affected us in one way or another. And the question we are asking, what are the opportunities we can take? What are the running lessons we can take? And today we are going to engage each other in the 2 days as we explore the impact, the survival, the growth, and most importantly, the customer who is our king. So mine today is to welcome all of you, to thank you all for for supporting the industry, and to welcome the director who will be giving us the opening remarks for the day. And it is my humble duty today to request all the participants and all the members logged in today, please, by way of waving hand, maybe you can put on your camera, you wave your hand, because we cannot clap because we are not in a hall where we can clap for the director to welcome him. Maybe unmute yourselves, people, put on your video. Let's all wave as a way of welcoming our director as she gives us her opening remarks. Thank you, people. Let's have a lovely day, and I know we will all run and we will all have an opportunity to move our industry to the next level. Most welcome, director. Please give us your welcoming remarks, and thereafter invite our chief guest. Thank you.
You have the link here. Yeah, I'm just.
Thank you very much. Thank you very much, our Deputy Director, Alice Njoroge, for that beautiful welcome. Mine is to recognize all the delegates who are here today. And I will start with the chief guest, Mr. Godfrey Kiptum, the Commissioner and CEO of Insurance Regulatory Authority, IRA Board. I'm aware that you are on board, the chairman, the directors, and the IRA officers, the Commissioner of Namibia. I want to recognize you, the Regional Director of the Chartered Insurance Institute of London, the chairman as well as CEO of the Insurance Training College.
So this one.
Sorry, I think I was muted, so I'll just start again and say the chief guest, Mr. Godfrey Kiptum, the Commissioner and CEO of Insurance Regulatory Authority, IRA. IRA Board Chairman, the directors and the officers of IRA, the Commissioner of Namibia, the Regional Director of the Chartered Insurance Institute, London, the chairman as well as CEO of Insurance Training College, Uganda, all the immediate past director of IIK, and all past directors of IIK, College of Insurance Director, CEOs of the entire insurance and financial sectors, all the delegates drawn from the entire insurance and financial sector of Kenya, our conference moderator, my fellow executive council members, and the IIK secretaries. Good morning. It is with great excitement that I welcome you all at the IIK Virtual Annual Conference of the year 2020. This year's conference is the first ever virtual conference organized by Insurance Institute of Kenya. By coincidence, it also happens to be the first time that IIK has organized a 2-day, half-day conference starting today and ending tomorrow. This year, we have received overwhelming support in terms of sponsorships as well as delegates for the conference. In spite of a difficult year, we have received sponsorships in all 3 categories of sponsorships. That is gold, silver, and bronze. And I will quickly mention our sponsors: IRA, Kenya Re, AAR, Madison, Mona, Sanlam, Zebri, Waikari, Geminia, CIC, Direct Line, Kenyan Alliance, UAP, APA, Binet, Kenya Re, Fast Assurance, Fast Re, and Jubilee. We are sincerely grateful for your support. The theme of this year's conference is resilience and thriving amidst COVID-19. Can the insurance industry navigate optimally? By the end of the 2-day session, we will be in a position to answer that question. Year 2020 has brought about many challenges as well as opportunities. The insurance players have had to rethink about the way they do business. Leadership during crisis has not been easy, and yet marketing is critical. Without customers, there would be no business for the insurance market players. And yet, as individuals, we need to remain healthy and cope during these unprecedented times. This year's conference will revolve around these real issues facing all of us. Our outstanding, passionate conference speakers, drawn locally, regionally, and internationally, will help us dissect these issues. I encourage all delegates to engage the speakers intensively and wish all of you an enjoyable and memorable conference. My second and very important and honorable job and task this morning is to invite our chief guest. But before that, I want to appreciate him for tremendous support he has continued to accord IIK, not only this year, but over the years. I now wish to invite you, our very own Commissioner and CEO of IRA Kenya, to give your remark and open the IIK's 35th Annual Virtual Conference. Can you help me to welcome our chief guest, Dr. Godfrey Kiptum? I don't know whether we are going to wave, all of us, because we may not be able to clap. Thank you very much. We appreciate you, and I now invite you to open this important ceremony of today, the conference of year 2020. Thank you. Welcome.
The Director, Insurance Institute of Kenya, members of the IIK Executive Council, IRA Board, colleague commissioners from various jurisdictions, distinguished guests, all protocols observed, good morning. I am indeed delighted to address this gathering this morning that marks the 35th Annual Conference of the IIK. And I'm impressed that IIK has put in a virtual conference, the first of its kind in this region. And I'm pleased also with the theme, which is quite apt in these times when we are addressing the challenges that have been visited upon us by the COVID-19 pandemic that has wreaked havoc in the world. And of course, for the insurance sector and practitioners, this conference brings you to interact, share experiences, and chat a way forward on how you can be able to manage and continue to build and meet the expectations of your customers. I must say that the last 8 months have been quite difficult. It has impacted negatively on business, but we have also seen growth, and some businesses have flourished. More so, the businesses that have been in the digital space, and we have seen the tremendous development that has taken place in this arena, and we have seen insurance companies, insurance practitioners move into the digital space in terms of distribution, settlement of claims, or handling client issues. And I want to say that the business models and projections that have been disrupted by this COVID-19, and perhaps the only constant that has been, is the high customer demands and expectations which industry players have been expected to meet, if not exceed. This brings to question the capabilities of the industry. No doubt the pandemic has brought to light some vulnerabilities within the sector, and I'm hopeful that moving forward, players are incorporating measures aimed at enhancing their resilience as they put in place recovery strategies. And it must not be lost on us that once there are challenges, the insurance sector must come in to protect their policyholders and protect their customers and clients. So we must be able to manage our business professionally, and this is where IIK comes in, to ensure that we are able to run professionally and manage the risks and offer protection to policyholders. And to put it in a more simple manner, resilience refers to, of course, the ability to cope with uncertainty by bouncing back and being able to meet your obligations, your expectations. And of course, the theme also requires or encourages the industry to thrive. And this is something that we have seen. We have seen the industry strongly weather the storm. And we hope that going forward, we shall be able to even grow. And this year, we have witnessed some growth in the life business. And we expect that even the general business will record some growth despite the difficult times. And we are, of course, most aware that the public run to the industry to seek protection. And therefore, the industry must ensure that they continue to provide that backstop that is required by policyholders and the country at large. It is common knowledge that we are currently living in a rapidly changing world, a world where uncertainty or unexpected events are becoming more frequent. We can talk of the catastrophic events, the flooding that took place recently in our country in Masai Mara, the cyclones that have been taking place all over the world, the La Ninas, the El Ninos, and of course the locust invasion that took place in our country in the recent past, which of course has had an impact on our business as insurers. And we must take into consideration that the facts, what worked yesterday isn't necessarily going to be enough to see us into the future. Neither is trying to remain robust, as we call it, or resilience. All this uncertainty is challenging us to become more aware of how we can use unexpected events to our advantage. And certain challenges has to become mindful of the innovation opportunities they are in, such that we can adapt, evolve, and thrive in response to our changing contexts. It is worth noting that the industry has realized remarkable strides despite the setbacks and challenges occasioned by the COVID-19 pandemic since March 2020. I'm glad that the insurance industry has stepped up and proactively played its rightful role in mitigating the risks and settling claims resulting from COVID-19 related losses. We have even approved newly introduced products and call upon players to continue innovating and improving on their products to meet the new customer needs and demands. From the government side, the authority is pursuing various regulatory and supervisory measures to provide relief to insurers while still protecting consumers and insurance beneficiaries in the wake of COVID-19 outbreak. The authority has issued a number of guidelines and provided for appropriate flexibility to help insurance maintain their safety and soundness while delivering the essential services they provide to policyholders and the economy. The authority's overall performance remains on track as planned activities continue to be implemented as scheduled. The industry performance, especially in life business, is signaling growth. We have issued various guidelines aimed at providing an enabling framework for enhancing industry operations and implemented measures aimed at ensuring that their file rates are used and that those rates are determined professionally by actuaries and underwritten professionally in accordance to recognized insurance practices. All these measures and others not included in this speech towards providing a safe and stable insurance industry that rightfully plays its role and meets its contractual obligations to its consumers. The insurance industry is undergoing revolution, and just like in many other sectors, it has been driven by technology. Building on the growing popularity of fintech, IRA has developed a regulatory sandbox policy and guidance note as we seek to adopt InsurTech. Already established Shafima Innovates that will foresee the selection and approval of sandbox applications. We expect that these applications that will be admitted to the sandbox will start operating in January 2021. The world is facing increasingly complex and uncertain risks. The COVID-19 pandemic is one such risk that has shaken the global economy, and players are incorporating measures aimed at enhancing their resilience as they put in place recovery strategies. Provision of insurance against new breeds of emerging risks requires coordination across many players within the financial ecosystem. As the pace of change within the marketplace accelerates, a major rethink of how the insurance industry operates is needed. Given the potential for sharply rising losses and ever more complex loss drivers. Given the potential for sharply rising losses and evolving risk environments can no longer be managed solely through traditional approaches. And of course, we know that basically the insurance sector has been a bit conservative in the past, but we are looking forward to a number of innovations that are coming forward. We have seen a number of products that are quite innovative, and we have even seen products that cover COVID-19, which, as you may remember, everybody was running away from it at the beginning. But since there's been a better understanding of the risk, we have seen now more bold initiatives to have the risk covered within the sector. Over the years, the insurance industry has continued to evolve, now stands on the precipice of profound change with disruptions emanating from many sides, demanding customers, new competitors, and a changing set of challenges are transforming the sector. Consumer expectations are shifting as they apply the experiences of other sectors, particularly online retail, to insurance distribution and service provision. They have become more informed and demanding. Service providers need to establish stronger customer orientations, build deeper customer relationships, and deliver customized products that has market demand. And this has to be done with speed, as we have witnessed in the recent past. The arrival of more nimble competitors, either in the form of insurtech platforms or technology giants, is increasing the pressure on incumbent insurers. There have been a number of developments taking place within our operating environment, which have been shaped by changes in regulatory frameworks, shifts in consumer wants and needs, deepening analytics, information disclosure, professional standards, and more importantly, rapid changes and disruptions being brought about by technology. These changes across the financial value chain are confronting the insurance industry with new questions. For instance, consumer needs have evolved, distribution channels have evolved, and the Internet of Things is affecting how risk is underwritten and predicted. Insurance customers, just like any other customers, have become more informed and demanding. In this regard, service providers need to establish stronger customer relations, build cheaper customer relations and platforms, and deliver products to the marketplace with more speed. With increased market competition, saturation, the future of insurance industry is at risk. In an age of increasing customer expectations, turning customers into fans is what insurance industry players need to do. Retain customer loyalty, trust, and build on it, and continue to offer more competitive products and exceptional customer experience. As I near the conclusion, I want to note that while COVID-19 has disrupted business operations, the same might just be a catalyst for innovation and change to insurer needs. Arising from the pandemic is a unique opportunity for insurers to rethink and innovate as they adjust to respond to market dynamics and consumer needs and preferences. For instance, there may be need for new products and upsides for usage-based insurance products, telematics, telemedicine, and all those kinds of innovative ways of dealing with customers. Customers need to see insurance as a value and providing value for money. The price, the products, features, and services must all correspond and be in tandem. And customers generally are willing to build long-term relationships and purchase multiple products with customer-centric providers. Driven by a transformed regulatory landscape, they are demanding clarity and transparency. To surpass competition and generate significant growth, insurers must change their focus. Innovation demands a shift from short-term tactical, long-term strategic decision-making, building business with strong foundations, with fit-for-purpose market operating models, and that eschews exclusions. Many of our insurance products have a myriad of exclusions that we as professionals in the sector can be able to review, provide them as ride-ons. You can be able to buy and add on to your policies, of course, and taking into consideration that there may be a number of moral hazards that we need to protect ourselves from. But we need to design products that are fit for purpose and that can be able to deliver to customers. And lastly, I want to laud the role of IIK in promoting professionalism, which we expect that the enactment of the bill currently pending in Parliament would, of course, promote professionalism, deepen, and also have a code of conduct that can be implemented and that is legally binding, that will also ensure that the services that are provided by the industry are professional and are up to the standard. I want to assure you that the authority will continue to support IIK. The authority will continue to support the industry. The authority will continue to build the work with yourselves to ensure that the insurance industry in this country is developed and is made more resilient, and an industry that responds to the needs of Mwananchi, responds to the need of Kenyans, and that will continue to serve us well. As we all know, insurance basically is there not to make you rich, but to protect you and keep you at a level where you are. If you have your property, you protect it by insuring. You protect the lives and your life and the well-being of your family by insuring and taking life insurance. And that gives you a basic, it gives you a standing, and that is the role of the sector. The sector will not make you rich, but it will protect whatever you have built during your lifetime. And with those few and many remarks, I declare this conference open, and I wish you fruitful discussions for the next 2 days. Thank you very much.
Thank you very much. Our chief, we have heard you well and clear, and I take this opportunity to thank you very much for those balanced remarks. We have heard about evolving, we have heard about being flexible, we have heard about being responsive, and we thank you very much. I don't know how we can appreciate you, maybe just by show of hands. And now I'll take this opportunity to welcome our MC for the day, Mr. Kelvin Okari, to take over. Thank you very much.
Welcome. Okay. Sorry for that. Well. Okay, welcome on board. We are happy to have you around. Thank you for joining us. We want to thank everyone who has logged in. We appreciate you for being here with us. We don't take your presence for granted. Now, it is my pleasure and privilege to welcome you here because of technology, I may not have a chance to just say hi to you, to greet you in person, to smile with you because some of you are in masks, so I'm not sure if I can see your smiles, but I can see your face move. That means smiling. Now, we are looking at three things. Number one, we're going to have wonderful presentations that have been lined up for us. We have excellent speakers on board, and I can assure you that they are here to do the great job of a service. We can also confirm that we have our paper chairs. They are on standby, ready to run our program with us, and I can assure you that it is going to be amazing. Now, I am going to take us through a few things that we have in store for us today. We'll have a presentation. Our paper one presentation will be done by a speaker, Mr. Charles Etemesi, and he will be presenting the impact of COVID-19 on insurance business. We will also have another paper today that will be done by Mr. Tunde Salako. He will be talking on surviving the COVID-19 crisis through digital transformation and creative utilization of data in virtual spaces. We will also have our third presentation coming from Mr. Dr. Peter Crow. He will be presenting on leadership during crisis, that is embracing corporate governance, compliance and risk management strategies. I am sure it is going to be a very excellent opportunity to engage and communicate and share. One quick thing I would want to put across to us is the need to remember the house rules, because if we do this without going through the house rules, it will be a bit difficult for us to manage. But I need us to remember the house rules. Just go through them. They will be projected to us. Remember, you are not allowed to interrupt unnecessarily during a presentation. And if you have any questions, you should be able to present it via the chat option so that it is able to be taken up by our speakers and they will be responding appropriately. We intend to keep time strictly. So thank you. Those are the housekeeping rules. That is, keep your microphone muted unless asked to speak. In case a point is not clear, raise your hand. For any questions, just use the chat section, and we will be having feedback forms that will be sent to you. Kindly give your feedback. I would appreciate if you're able to give real-time feedback on those forms so that by the end of the program, we'll be having something to look back to and a way that we'll be able to make amends as we go forward. I want to really appreciate our sponsors in a very special way because they have done an excellent job. Were it not for our sponsors, we will not have made it in this program today. So I would wish to appreciate all our sponsors on board. The director was able to appreciate them, but of course, as it is known in this world, sponsors need to be appreciated over and over again. And I will still take the opportunity to appreciate them once again. Were it not for them, we will not have been here today. So of course, we have the three categories of sponsors. We have the gold sponsor, we have the silver sponsors, and we have the bronze sponsors. We will be able to give you a highlight of the names as will be projected to you so that we will be able to appreciate them in a very special way. Of course, we're going to start with the gold sponsor because just by the fact that gold is valuable, we want to appreciate the Insurance Regulatory Authority for sponsoring this event. I can assure you that they have done a major sponsorship to us, and we want to say thank you so much, our gold sponsor, that is the Insurance Regulatory Authority, for being here with us. I would encourage all the other firms to also consider being in this category, because having just one means that they have taken over in this category, and you can consider yourself having your name there in our next conference, and we will be glad to mention so many gold sponsors in this category. Next, we will be having our silver sponsors that we wish to appreciate. The silver sponsors are AAR Insurance, Madison Insurance, and Africa Re. We want to say thank you so much, AAR, Madison, and Africa Re. You know, in these COVID times, when probably business is tough and difficult and probably making losses, to find somebody who is willing to chip in again for such an event is an honor in itself. So we want to say thank you so much to our sponsors. That is the silver sponsors, AAR, Madison, and Africa Re. We say thank you, asante sana, for being here. And we will encourage more people to come on board so that so many sponsorships can come in this category, if not the gold category. That is our way of saying thank you and we appreciate you. Last but not least, of course, we want to welcome also the bronze sponsors. We have Waikari Insurance Corporation. We say thank you so much. We have Sanlam. We say thank you. Zepri. We say thank you so much. The Monarch Insurance. We appreciate you. CIC Group. Thank you so much. Geminia Insurance Company Limited. We appreciate you in a very special way. Direct Line Assurance. Thank you so much. Kenya Re. We appreciate you. Thank you so much. Jubilee Insurance, thank you so much. APA Insurance, we appreciate you, thank you. Kenyan Alliance, thank you so much for sponsoring. We appreciate Minet for being with us also and sponsoring this. And we also have UAP Old Mutual. We say thank you so much for having come in. We pray that next year you will graduate from the bronze sponsorship and leave space for those who did not sponsor, so that you are able to take up your positions high up in the radar. That is in the category of the silver or the gold sponsors. I know you have the capability to do it, and God is going to take you through. Now, we will be sharing videos by our sponsors, a few of them. As we log in our speakers, we will be able to share so that you're able to see some videos that have been done and a few words so that you are able to be conversant with our sponsors. Welcome on board once again. We say thank you for joining us, and we request that you may enjoy, learn, and of course, grow to become better and better each day. Thank you and welcome on board. At this time, we're going to have a video. The video will be from one of our sponsors, and we welcome you to enjoy it. And of course, we will be able to learn together. Karibuni sana. As we prepare the video for us, I wish to also acknowledge the companies that have sent delegates here. You know, the companies that have sent delegates, we don't take you for granted. Having considered that you got into your expenses, got us as many delegates as possible, and even paid for them to be here, we want to say thank you so much. You know, for a company to sacrifice and make that effort, we don't take you for granted. Karibu sana, and we are happy to have you. I have forgotten First Assurance as one of our bronze sponsors. We say thank you so much, First Assurance, and we appreciate you for being on board. All those companies that have sent their delegates, thank you so much. Welcome on board. We're happy to have you. Now, the video from one of our sponsors.
We all know that the world has changed due to the COVID-19 pandemic. Our lives have been affected in one way or another. For those of us who have lost loved ones, those of us who have lost livelihoods, and even those businesses that have had to close down, my thoughts and prayers are with you. We are a resilient nation. We are strong, and we will get through these tough times together. Madison Group is a locally incorporated financial services company. We specialize in life assurance, general insurance, and investment management. We started our journey in 1974 as Crusader PLC and changed our name to Madison Insurance in 1988. We have operated as a composite company up until 2018 when we demerged. At Madison, we strive to provide life without worry for our clients through the education policies, investment products, retirement planning, life cover, healthcare, and general insurance products. Thanks to Madison Life Assurance, over 160,000 individuals live a life worry-free through the products that we provide. The client is always at the heart of our product planning. We've developed products for each stage in life, from primary school, secondary school, university, during the working years, and even retirement. We have abided by the Ministry of Health guidelines on social distancing and wearing masks in the workplace, amongst other measures. Our staff now work in shifts and others work from home. This has accelerated our need for digital transformation to ease access for our clients who are currently at home. With the new norm, our clients have been reaching us from the convenience of their homes through our USSD platform, website, and Madison app, where they can access our products to get a quotation, pay premium, make an investment, or view their statement. As a locally incorporated company, we understand the client's needs. Our clients are at the heart of everything we do, from product development, process reengineering, and our open door policy, where we are accessible to each and every client. We'd like to thank all our customers, from individuals, SMEs, and corporates. We are grateful for our partners, brokers, agents, suppliers, and also IRA, our regulator, who has been at the forefront and championing the growth of the insurance industry, especially during this tough time. Welcome to the 35th Iik Annual Conference. This is our first ever virtual conference. Let us engage, interact, and encourage one another. Thank you.
Thank you so much from our sponsor, Madison. Thank you for the wonderful presentation by the MD. Now, I have also been reminded about Fast Tree. They are also our bronze sponsors. We appreciate it in a very special way. Thank you for being on board. We also appreciate each and every person who has been able to log in this far. We don't take your bundles for granted. Your internet, your electricity, everything is appreciated. Now, we want to get straight to our presentations, and we will be able to bring our presentations right away. Our team is ready and on standby. But before we do so, it is my pleasure and privilege to welcome the paper chair for our first presentation. That is Ms. Caroline Monene. Caroline is the AR Insurance Group CEO, responsible for driving AAR insurance operations throughout Kenya, Uganda, Tanzania, and ensuring growth. She has served in various leadership capacities for the last 20 years within the insurance industry. She has an impressive CV with the Master Business Administration, Bachelor of Commerce Marketing, and a professional diploma from the Chartered Insurance Institute, London, and currently pursuing her PhD at the University of Nairobi. You know, I'm used to mentioning the University of Nairobi twice because I am an alumnus there. She joined AAR in 2013 as a general manager and rose to managing director in 2015. She has been instrumental in the stellar performance of the business, registering tremendous business growth as compared with a gross written premium of 2.6 billion in 2013 to over 6 billion in 2017. Wonderful performance. Over and above her notable performance record, she possesses vast experience in business strategy formulation and implementation, as well as developing initiatives to enhance profitability. She's also credited with improving the company's general efficiency by streamlining business processes, a move that saw the company ranked the top insurer in Kenya in settlement of claims in the non-liability general insurance category by the Insurance Regulatory Authority in the second half of 2013. Ms. Munene has had an immense impact on Kenya insurance sector, contributing meaningfully to growth and innovation through membership and active participation in key industry bodies such as Association of Kenya Insurance, that is AKI. Previously, she served Madison Insurance Kenya as an executive director, principal officer at Kabage and Mwirigi Insurance Brokers Limited, Tanzania, and supervisor at Lion Kenya between 1992 and 2012. That is a whole 20 years of service. She was also the chairperson of East Africa Insurance Institute Association, a director with the Institute of Insurance Kenya, Insurance Institute of Kenya, that is IIK, between 2012 and 2015, and board member at AKI. It is my pleasure and privilege to welcome Ms. Caroline Munene, who is a clear definition of beauty and brains defined. Ms. Caroline, welcome on board.
Thank you so much, MC Mr. Okari. I think this is a very generous introduction. I'm not sure where you got all those details, but thank you so much, for the introduction. I also want to thank the Insurance Institute for inviting me really to come and give an introduction to the paper chair, and also to congratulate the Institute for this very special conference, the first of its kind, and it being a regional conference, really a step in the right direction. So thank you very much, Insurance Institute, and very well done for mounting this conference, especially a time such as this. And just to make one comment is just even to request that if we can have many more forums that bring together insurance practitioners. The environment right now is calling for more dialogue, is calling for more communication, is calling for us actually to work together as insurance practitioners. We have competitive interests, that is true, but we have more in common right now than ever before to allow us to come and just discuss and see how we can manage things in a better way. I also want to recognize the IRA and our CEO there, Godfrey Kiptum, and thank him so much for the support that he has actually given us during these very trying times for us as practitioners, for us as business people. It has not been very clear how to deal with the situation that we find ourselves in, and that we'll be discussing shortly. And all of you must, of course, appreciate we still don't have clear answers. We still don't have conclusive answers in terms of what we are going to do and how we are going to manage better and how we are going to work within this situation, which, as we discuss it in our paper today through our chair, we'll be looking at what are the opportunities really that exist within the current situation that we find ourselves in. But it is not lost on, of course, most of us that clarity on the issue is due to come. And of course, it's not going to be a one-year cycle in terms of a change in our industry and in our business. This is going to be a change in the longer term. And that is how we are going to look at it. So therefore, the more dialogue we have, like what we're having today, the more we discuss about the impact of COVID-19 on our business, the better. Actually, I want to even propose if we can have a monthly platform to discuss not just the impact of COVID-19. We need to look beyond that into what actually are the opportunities that exist within this current environment that we can take advantage of. So this is a very relevant time for discussions and to hold narratives on impact of COVID-19. And as I introduce the speaker, because my duty is very simple today, really just to bring the speaker to you and I bring the topic to you. I remember a story that is told about a frog and hot water. And the story is told that if you put the frog in a boiling pot of hot water, then the frog can simply and suddenly jump out of the hot water. And then the story is told that if you put a pot in a bucket of water and slowly start hitting the water from outside, then the frog will get comfortable and the frog will stay inside the pot and the frog finally will boil, and that will be the end of the frog. So as an industry, I think as we discuss the impact of COVID-19, we really must chart forward how we are going to approach this situation. We can start getting comfortable and looking towards the tail end of this situation and forget that we are not in a short distance run. We really are in a long distance run. So as we move through the conference, I think we really must come into our mindset and clearly set out how we are going to chart the way forward, especially in terms of working together as insurance practitioners, especially in terms of us being able to speak in one voice as practitioners, because really also we are at the heart of the changes and the impact of COVID-19 on the business. So I really think a time has come and we must really have one voice so that we can find our way out. So the topic is simple for today, and it's the impact of COVID-19 on our businesses, and of course brought to us by our very able speaker for this paper. And his name is actually Charles Etemesi, and he's the CEO of Iik Reinsurance Kenya Limited. And Iik really has a very serious and good origins in the West African part of the continent. And they have, of course, various offices, of course, in Nigeria, in Ghana, in Sierra Leone, in Kenya. And I think he'll give us a bit more on where they have other offices, but he's an experienced CEO and has done masters in business administration, in management science from Kenyatta University, Nairobi. And he also has a Bachelor of Arts degree in economics from Bombay University in India, and a diploma in insurance from the Chartered Insurance Institute of London. Mr. Etemesi has very wide experience in insurance, of course, and reinsurance matters in our industry, in the region, I think in the African context as well. And prior to joining Iik Re Kenya, he was the CEO and senior management, held senior management positions at both Kenya Re and Prima Reinsurance in Zambia. So our speaker is actually well experienced in both sides of insurance and reinsurance, and very well qualified actually to bring to us this very important and very timely topic for us as an industry. And that topic is the impact of COVID-19 on insurance business in Kenya. So it is my pleasure and my duty to introduce Charles Etemesi to you to kick off from there. Thank you very much and welcome to the paper. Welcome, Charles.
Thank you, Carol, for that warm introduction. I will shoot straight to the paper because of time. So I'll be projecting my paper from here.
We'll present the paper in 40 minutes and allow about 10 or 15 minutes of some interaction from the audience. So the paper will take the 40 minutes, and I will give you a cue when the 40 minutes is coming to a drawdown.
Maybe the team there can be able to. I think I'm there now.
You're there? You can put slideshow.
Yes, I'll put a slideshow. So, distinguished delegates, our chief guest of IRA, our Commissioner, Mr. Godfrey Kiptum, the IRA Chairman, Mrs. Grace Mohammed, the IRA Namibia, Ms. Agnes Macharia, our Director of Insurance Institute of Kenya, regional representatives, the insurance and insurance experts, distinguished participants, ladies and gentlemen. It's really a pleasure to present our paper today, or to speak to the participants of this great conference, which brings all of the insurance experts together annually. It's a privilege on behalf of our company, Waikari, to be able to be given a slot, at least to be able to present a paper that has been, as Carol said, has no conclusive answers. And as you've heard our speakers so far, our chief guest and Carol, they've already delivered the paper. So basically, I will be taking you through highlights of some of the areas that we have looked at, and as an industry, maybe a very participatory session that cuts across the impact of COVID on our business. Well, just for a start, you know, at a glance, let me just introduce who we are. Waikari, as has been mentioned by Caro, was formed way back in 1973, but then it was a pool. Subsequently, it transformed into a reinsurance company in 2011. The company has become one of the leading underwriters in Africa and beyond, that it has an AM-Best rating. We have offices, regional offices in Nigeria, Ghana, Ivory Coast, and the group opened subsidiaries in Zimbabwe and Kenya. Kenya, we started operations in 2018, and we are here writing general business. So at a glance, that's who Waikari is, and those people, and that's the company we present here. I'll go straight into what I would call a business dilemma. What has COVID done to us in 2020? You realize, like the guy sitting on that razor, he can't move forward, he can't move backward, and he can't stay there for too long. So what are we really into as a result of the COVID pandemic? Basically, just an introduction of the kind of pandemics that we've seen. Of course, COVID is not the first one, and definitely not the last one. We had the Spanish flu some time ago. The Spanish flu was there in times of war, and the estimated infections then were about 500 million people, and the estimated deaths were 20 to 50 million deaths. This was way back in 1918, and then came the Asian flu, followed by the Hong Kong flu, and of course the more recent one that we can relate to it was the SARS of 2002 to 2004. Again, these were pandemics that had influences on people's lives and businesses. In terms of what we are experiencing now, we have had various statistics keep on changing on a daily basis, but the figures we had as at October 2020 from the World Health Organization are as indicated. Of course, various approaches by governments to halt the spread, ranging from those who were termed as excellent and those who are termed as questionable. People like New Zealand and countries like New Zealand and Rwanda have been termed excellent, while some like US and Sweden have been termed questionable. So here in our country also, you've seen various approaches that the government has taken, and as recently as yesterday, to try and curb the growing pandemic. Well, the pandemic has an impact on our business. And so if you look at the insurance business, insurance business as it is very complex. We have to sell our business. We are used to meeting our customers. We are used to meeting our clients. We are used to going to conferences. There's an interplay between the insurers and the external networks. And so it's an interactive kind of business, and we like meeting each other. But unfortunately, when COVID came in, it posed a new surprise, ranging from challenges on how to maintain our own operations. And this, of course, severely disrupted the normal working operations. We were used to having conferences. We actually we are proud to say that our business is that one of relationships, meeting each other. But now I think with the onset of COVID, things have really changed, and the working operations is no longer normal. So what are we witnessing as insurers, and how are we faring? You see the industry, how we would ask ourselves, how is the industry likely to shape up after this unfolding crisis? And what are the critical flashpoints that we could be looking at? I think these were issues that were raised under the commissioner's remarks. What are the implications across the various segments of the industry? And what long-term trends might the outbreak usher in future? Are they positive or are they negative? Well, one of the things that we've witnessed with the onset of COVID is we quickly adopted the change in the working environment, and we started working from home. It's something that we had not really envisaged, and something that we always had a work environment in the office. Slowly, we've noticed that several companies have begun returning to the office, but on an alternating basis, team A comes and team B comes after a week or so. So life is still not yet back to normal. We are still operating from home. Many insurers have been looking at ways to increase their digital platform, connectivity, and lower reliance on physical co-locations of people. So we have found that it's an environment that we have had to adopt. The challenge that we face there, of course, is to ensure that now that we are not in the office, is the environment, as it created, what's the communication? We need to see that the communication between staff and, of course, the staff and the management is seamless in terms of the working environment at home. What are these challenges that we have been faced? I mean, while we work from home, what are the challenges that are posed to employees and employers in terms of our business? We are asking ourselves, how does the WIBA class policies respond to injuries to employees working from home? We realize that it's not easy to prove that an employee was injured in the course of work, and hence a potential area for fraudulent claims. We're also saying that beyond telling employees to work from home, are employers making a follow-up to ensure that the working conditions at home are conducive? Most likely, this is not the case. We have not done it here at Iik, and we're sure that quite a number of employees have not gone around to check whether the conditions are working. But we have the utmost good faith that whatever conditions at home are conducive. But again, it's a most likely area for potential for employer liability claims. Working from home basically means that these are online, and this exposes companies to cyber risk. Maybe this is an opportunity for the cyber risk insurance to have a look at. Potential claims as an area that again the COVID has raised. Initially, the initial reaction when COVID set in was for us to say that being a pandemic, the claim was not covered. I know meetings were held to this line of thought. Probably they were right, but a few questions should be asked here. How are the policies worded? Were there clear exclusions related to pandemics, or did the industry assume that a pandemic exclusion is a traditional standard, and hence the policies were silent on it? For sure, it was a surprise to most of us, or most of the industry, and the best reaction was, first of all, to say not covered. But slowly, we are seeing that this may not be the way to have gone, or this may not be the way to go. On the issue of potential claims, we got the guidelines from IRA to the effect that insurers are supposed to pay promptly claims that are related to COVID-19. A question to pose is that did this weaken the insurer's position, or did it affect policies which were expressly excluded pandemics? While still on it, again, COVID is a very fast. It's likely to be one. It's likely to be one of the slowest developing catastrophes that insurers have ever encountered, and likely creating a prolonged period of uncertainty. But the biggest question we are seeing is on certain policies. Are there potential claims, for example, on business interruption, where property damage, without property damage, is there a possibility? Is there a clear position from the industry on this one, on how to handle such a claim? We have witnessed claims that have come through. An example we have is a mall where a claim was submitted, and it was alleged that the owner had lost rentals income under BI, and particularly under miscellaneous risk extension, which covers the COVID diseases. And in this case, the argument was that COVID is indeed an infectious disease and sought to recover. The legal advisor, insurance legal advisor, is non-committal so far, but they have still insisted that there's a possibility that the insured can succeed if they were to prosecute a case. So we are not yet out of the woods as far as the BI without material damage is concerned. We have also witnessed an interesting debate on how medical insurers have responded to COVID claims. Some saying that in an enclosed environment, it will be possible to prove that somebody is ill. But while on a business trip in a plane, would it be easy to prove that this guy contracted the disease in an enclosed environment, or was it just a carelessness? Medical insurers eventually settled on a compromise to pay COVID claims related to services offered by government hospitals. This was some way of waiver of the pandemic exclusion that prevents a policy holder to seek compensation through courts, at least, again, offered in a private hospital. This is also, again, food for thought. While there on the issue of potential claims, in the UK, the regulator took 8 insurers to court on behalf of the regional insurers regarding the BI claims, and they won the case. So are we likely to see the scenario in Africa or Kenya? The insurance industry has to be prepared for any eventuality. We're also likely to see event cancellation and travel claims. And at this point, it's difficult to tell how the insurance contracts are going to respond to the emerging trends. Some of the areas, of course, again, that COVID has impacted on are the channels of communications. Many insurers, carriers struggle to effectively handle a request, inputs, and channels of communication. One of the biggest challenges happening right now is a spike in customer contacts. Whether is it we as I alluded to earlier, whether it's about travel insurance, critical illness, health cover, or any other that customers are dealing with, insurers are overwhelmed with queries over how and what and when this should be covered, or is it actually a claim? So these issues necessitate a number of reactions. Firstly, insurers need to insist that insurers contact them by phone. Insurers need to insist that customers contact them by phone or with only the most urgent inquiries. Everything else should be routed online. It also means that insurers need to look at their internal resources and how they are distributed potentially, moving as many people into claims as possible. That's again a way to see whether the claims that will be able to assist. As mentioned by my chair and even our chief guest, is an area of technology is another area that we are seeing growing, emerging out of this issue of COVID. In terms of technology, there's a forward movement in the insurance sector. And of course, customers are delighted that insurance companies are hopping into the digital age. Digitization in expanding their footprint and leveraging on low-cost digital distribution channels for sales and services, which eventually depends in their market. The issue of still on the digital platform, certainly those insurers who have moved into the digital underwriting and administrative processes are in a much stronger position than others. Even if processing time is slower now than in the normal condition, there's losing customers who move to a more digitally enabled competitors rather than stick to the traditional way of doing things, which is now almost off completely. So now digitized processes are very low nowadays. So in the insurance industry has lagged behind at least if you look at what the other industries have done in terms of the banks, but at least this is a challenge that has come in and has led another issue that we have seen when the intervention by the regulator, by the intervention by the various bodies that govern the insurance sector. The regulator, for example, as mentioned earlier, he issued a circular assuring policyholders that the public of the industry support. This shortly, the main aim for IRA in this case was to ensure that the policyholders are covered as much as is practically possible during the pandemic. We also saw the an intervention from the Cabinet Secretary, National Treasury. And in this case, he said that the companies were exempt from maintaining the capital adequacy of 100% for a period of 6 months. This meant that the local firms will be exempted from the capital adequacy requirements for 6 months between January and December. The move is expected to help the industry to cope with the impact of COVID-19, which has eroded the earnings of many Kenyans as some are unable to keep up with the regular payment of premiums. Well, with all this, it still remains a challenge to deal with the complex or high-value claims, where evaluating the physical evidence of obtaining expert reports in person is frequently a key part of the process. Insurers stepping up to help policyholders. This is one of the areas we've also seen where the waivers have come in. Insurers are stepping up to help their policyholders in different ways. For example, some are providing flexible and grace periods for premium payments, waivers for certain parts of their claims processing to expedite payments. We see this trend in other insurers all over the world. All of this will require operational processes to adjust and adapt to the time at a pace that is likely not to be imagined, was not to be imagined before the onset of COVID. Another area is the fraud risk. Of course, people are getting, the jobless industry is growing with the issues of people being laid off. The hospitality industry and the banks have witnessed a lot of this. So the challenges faced by insurance companies trying to mitigate against the risk of fraud, and this is the increased dependence on numerous third parties, finding the right balance between automation of systems and the manual intervention in underwriting of claims. All these factors raise another prevalent issue, mitigating the potential of fraud. We are already hearing the growth of fraudulent claim attempts. Well, that's another key operational area that has been impacted on by the advent of COVID is the distribution channels. Insurers' interaction with the brokers and intermediaries. Some broker IT infrastructure are having more difficulties providing administrative services. Insurers need to look for ways of reducing the amount of information needed from the brokers for renewals, for example, applying data assumptions and maximizing the use of public available information. Insurers should review ways to keep the operation support teams can work with brokers to help keep the business flowing. Another area that we have witnessed also is insurance firms have reported a sharp rise in policy cancellations, withdrawals by customers squeezed by the economic fallout. The cancellations pose a threat to stability of insurers for the form of lost premiums and squeezed liquidity. A Gazette notice, a circular released by IRA, a report released by IRA noting that 20 insurance companies out of 56 licensed companies are in this, there it has been cushioned by the Gazette notice that I alluded to earlier. But basically, the job losses and the heightened instability in the places of work has led to an increased cancellation of policies. While there, you'll realize that motor clients are also looking for third-party covers as opposed to the comprehensive ones. Microinsurance, the SMEs are having the hardest hit, as COVID-19 insurance players in the microspace are likely to struggle on the business development and premium collection fronts. Interesting enough, while we are suffering on one side, there are some savings that are coming up, because despite the health challenges brought by the COVID-19, Kenyans spent less on medical bills in the financial year ending June 30th compared to a similar period. This may be, as alluded to, the fear of contracting COVID, as many patients stayed at home. Well, in concluding, and as earlier mentioned, that we are not likely to see the end of this pandemic soon, but we as insurance and reinsurance experts, we need to be looking at how to tame this in terms of our business. Pricing will be of key. How to price the business, how to price our products will be key. And this we should, as I mentioned, COVID-19 is definitely not going away. It will not be the last pandemic to hit the world. So let us price up appropriately to avoid being caught off guard in the future. So distinguished delegates, thank you for listening to me. I will invite any questions and answers. Thank you.
Well, thank you, Speaker, and very well said, and a good presentation on the paper. You did capture everything that we have on the paper, and you captured the whole ecosystem and the impact COVID is having on just various aspects, whether it's regulation. We are seeing more hands-on regulation coming through as a result of the COVID, whether it's in terms of processes and the digital space. You know, the need to move operations into a virtual or digital environment. That has been taken up very well by insurance companies in terms of dealing with the situation. We also touched very well on the channels of distribution and the need to innovate and look at different ways of distributing our products. And I think you also touched very well on the possibility of fraud that could be coming through as a result of the changing environment that we have. And of course, you touched on the customer changes. And all of us know, starting from ourselves, that we will never look at the world the same way again. So very well said. And from customers, even the psychology of customers, you can see a lot has changed. Things that people had as a priority in the past will no longer be a priority going forward. You know, people who would visit, you know, the bar as a priority. Now, because of the curfew, there's no more going to the bar on a regular basis. So those are some of the you know, changes that have come through on the psychology of customers. So very well said, Chair. And just before I move on, just to appreciate very much, I'm told that the chair of IRA is in the house, Mr. Abdul Rahim. Welcome very much to the conference. I'm also told that the Commissioner of Namibia, Ms. Grace Mohammed, is in the house. So welcome very much to the conference. So we are ending the presentation of this paper there for the delegates to even raise a question if you have one. We can entertain through the chat. If you have chatted, you can write one question on the chat and we can look at it. And there's some question here, Speaker, how are employers supposed to ensure a good, conducive work environment for employees? That is question number one. Question number two, thanks for the detailed presentation. What is this new requirement of reinsurance come January 2021 in terms of rating of risks going up? This is very untimely and will impact negatively on our industry. So Speaker, those are the two quick comments coming through from the panels. Maybe you can take them.
Thank you. I'll go to the first one. How do we ensure a conducive working environment? Very subjective, really. You know, you just give the tools of trade that you have at home, I mean, the office at home, pass them over home. Because it's really, I know situations where, not really in our industry, but say in the banks where money dealers, they've actually had to move the whole money dealer office into the house. Otherwise, all those machines that people have to look at the rates and the changing environments in the various markets, it's now installed in your home. But we don't have that kind of environment. I think it's just to ensure that everything that is in the office is at home. So don't assume that where somebody is staying is okay, because really it might not be an office environment per se, but it's really subjective. In terms of the one for the circular that you've asked, I think I wouldn't want to divulge so much into it, because really it was a decision taken by particular reinsurers. So it would rather be addressed clearly by those insurers that wrote the email, although whatever is in it, we support. But for now, I think we wouldn't want to divulge to go into discussing whatever was written by the various reinsurers.
Okay, Speaker, I think you take our comments back to the reinsurers that we are requesting they be supportive in the current environment. I think that is what the panelist is bringing through. So our message should go back. We expect and request for support from reinsurers. Yeah. There is a question here. Kindly share some insight on how insurance companies should handle COVID-19 medical claims. I think I will comment on this one with your permission, Speaker.
Yes, please.
And just to say that with reference to medical claims, that all claims are being adjudicated as per policy terms and conditions with the customer. And we have had very few challenges. The claims have been adjudicated very well. And where there's been any dispute, I think we have worked together very well with the IRA to make sure that we have good resolutions. For medical insurers, I think the idea has been to support our customers during these very challenging times, of course, within the policy terms and conditions. So that's how we are handling the particular claims on COVID. So unless there is any other question, I would like to bring the paper to a close and just thank the speaker very much for very good preparation on the paper and very good presentation. So thank you very much, and we are signing out as paper 1. Thank you. Over to you, MC.
Thank you. Thank you, Chair.
Okay. Yeah, before you sign out,
Yes, MC.
Yes, before you sign out, there's something I have seen here.
Yes.
I have seen two participants had raised their hands. That is Meshach Nakitare and Andrew Mulunga. I would wish that we are able to bring them in. That is Meshach and Andrew, so that they can also be considered for probably their question or something that they had in mind.
Okay, I was looking at the Q&A questions. I don't see any other questions there. So MC, do you have specific queries you want to raise?
I noticed that they had raised their hands at the participants section, the two of them, and I thought it would be wise to bring them in. Probably they had a question, and maybe they didn't type it at the Q&A section. And it seems like they have they have dropped their hands, so we will take the hands as dropped. Now, thank you so much, Madam Paper Chair and the presenter, Bwana Charles. We want to appreciate you in a very special way. Thank you also for keeping time. You've been excellent, and we really appreciate you for that. Now, at this time, I would want to bring us to another session. But before we are able to proceed to our next presentation and probably a break, we have two presentations. We will bring to you the Executive Council members, and then after we bring the Executive Council members to you, we have a presentation from Africa Re.
Africa Re will give us a presentation also, after which we will proceed for a break and we will resume with the paper 2 presentation. So for now, we're going to have the introduction, or we're going to have the video by Africa Re being projected to you. Karibuni sana.
Necessary to build Iik Annual African regulatory alternatives to carry out various initiatives such as alternative to improve the underwriting and life insurance practices, and IT applications to improve the industry statistics and transparency. All the way to 2020 to celebrate excellence a tremendous growth of $3.3 billion for the fight against the COVID-19 pandemic in Africa. The beneficiaries include Africa's Centers for Disease Control and Prevention, the World Health Organization, major African cities hosting our 8 regional offices, and the 14 national insurance associations of African member countries. We were also able to obtain the re-licensing of its South African subsidiary by the Prudential Authority in June 2020 under the new South African Insurance Act. Launched the Africa Re-Underwriting Agency Limited in the July International Finance Center in August 2020. Continued the preparation for life operations in the South African market, beside the other life operations established since 1995. Improvements ranking to 41st in the top 50 global reinsurance companies of the AM Best Rating Agency. In Africa, we don't hesitate in a crisis. We remain professional, show sympathy, and demonstrate empathy towards all of our stakeholders. During the crisis, our DNA does not change. It takes us through the crisis. We stay alone, care, lead.
That was Africa representation. I think the next video was the Salema challenge that was about to come in. And I'm sure many companies, insurance companies have participated in that. Only that I noticed one did a Gikuyu version of the Salema challenge, and it was amazing anyway. So if your company hasn't, you can try and see how much employees can flex those legs in the presentations. Now, thank you so much, Africa Re. We've also noted your information that we could not have got the audio better. Our team is working on it to ensure that you have a better quality of the audio for that video, which will be presented again in a few minutes. Now, at this time, I had indicated to you that it is important to know your executive council members. I believe there are some interviewers in the panel when they decide to ask you about the executive council members and you're left hanging. We want to save you and get you that job by introducing you the executive council members, and that video is coming up. You will be able to know them as we prepare you for the next part of our presentation. Welcome and enjoy.
Advanced Diploma of Insurance from the Insurance Institute of London. I'm the 66th Director of the Insurance Institute of Kenya and the leader of an able team of executive council members. Together, we accepted to serve in the umbrella body of all insurance professionals in Kenya during the virtual AGM, which took place on 7th July 2020. I have served in the Executive Council in the Insurance Institute of Kenya since 2009 in different capacities, starting as a member, then a PR convener, then a Home Secretary, Deputy Director, and now the Director in year 2020.
Good morning, everyone. My name is ACI Aris Mothoni Joroge. I am currently the Deputy Director of the Insurance Institute of Kenya. I also sit in the Insurance Regulatory Board, representing the Insurance Institute of Kenya. As your Deputy Director, I promise to serve as a servant leader and to have a transformational leadership in the Insurance Institute of Kenya. I believe as a servant leader that we need to hold each other's hands and raise the Institute to the next level, and we will be able to have an all-inclusive approach where we believe in each other. Indeed, this is evident in this year's conference theme, which is talking about resilience in the industry. The conference theme is bringing about the digital transformation and innovation. It is time as an industry that we rise up from the old traditional ways of handling insurance to the new digital norm. We are at the tail end of our insurance professional bill. It has gone through the first reading. It is due for the second reading in a week's time, and it is soon going to be an act of parliament. This is going to be a game changer, whereby we will uphold professionalism and change the perception of this industry. Lastly, Adi Stanley said, readers who don't listen eventually will be surrounded by people who don't speak. Members, we are encouraging you to speak. As your readers, we are listening. Thank you.
My name is Christine Ronga, ACII, AIK. I am the Home Secretary of the Insurance Institute of Kenya, a non-profit organization. Basically, an institute that is charged with maintaining and establishing professional standards within the industry. The institute is run through committees. We have the membership committee that is charged with onboarding new members.
We have the knowledge committee that is charged with training, the PR committee that is charged with communication within the institute and of course with the general public. And we have the legal committee that ensures that legal and professional standards are maintained within the industry. We'd like to urge all you out there within the industry who are not yet our members to ensure that you register with us so that we may move together and move this institute and the general industry to the next level. Thank you.
Hi, my name is Mary Noel Wanga, an advocate of the High Court of Kenya, and an associate member of the Insurance Institute of Kenya. I'm currently the convener of Legal Affairs and Professional Standards Committee. Okay. Our role and mandate is to develop, launch, and maintain a code of ethics, to develop further regulations for full implementation of the Insurance Institute of Kenya Constitution, and to work towards having the Institute, IIK, recognized within a legal framework through an Act of Parliament. The Insurance Professional Bill 2020 for IIK, as you all know, has already undergone its first reading in Parliament, and we are all excited and optimistic that once this bill passes and it is enacted as a law, it will be a game changer within the industry because it will bring about discipline among the insurance professionals. This act will bring about accountability, transparency, responsibility, and quality of service amongst the insurance professionals within the market. It will also bring about penetration and growth of insurance in the industry, in our interaction with the public and all the stakeholders at large.
Hi everyone, my name is Mercy Kiana Mwangi. I serve at the Insurance Institute of Kenya Executive Council, and I serve in the Legal Affairs and Professional Standards Committee. I'm very passionate about the Institute, and I'm passionate about the conference that is on 5th and 6th of November 2020. I invite you all to attend. There's a lot that you can learn from there. Thank you.
My name is Peter Kagia, Fellow of Life Management Institute. I am a member of the Executive Council of the Insurance Institute of Kenya. I'm also the Honorable Treasurer of the Institute and a member of the Finance Committee. My role is basically to ensure that the Institute's financial health is taken care of. We look at avenues for revenue generation, managing the expenses, and ensuring that the surplus that are generated are wisely invested for the benefit of the Institute. Thank you.
My name is Jane Aningo. I'm the convener for Member Service. Member Service Committee is in charge of membership recruitment, where we ensure that all insurance professionals are brought on board. We also facilitate the CPD program, and we are also in charge of the value addition to all members. Thank you.
Hello, my name is George Obutu. I'm an SCII and a chartered insurer and a member of the Insurance Institute of Kenya. I'm a member of the Executive Council, and I also sit in the Legal Affairs and Professional Standards Committee. Our role is to ensure professional standards in the insurance industry and also to ensure
an associate member of the Insurance Institute of Kenya. I'm currently serving as the convener of the Public Relations Committee. The committee is made up of 5 members drawn from across the industry. Our main role is to coordinate communications programs and help build a positive brand image for the Institute.
Hi everyone, my name is Ronald Omondi Oyamo. I'm an associate of the Insurance Institute of Kenya. I'm also an Executive Council member, and I sit the Public Relations Committee, whereby our role majorly entails communication and creating awareness about the Insurance Institute, whereby we try to foster good relation between the Insurance Institute of Kenya and the industry out there. Also, partly we do CSR that creates now good bond between us and the community.
My name is Simon Gitonga, a fellow of the Insurance Institute of Kenya and the convener of the Knowledge and Development Committee. At the Knowledge and Development Committee, our work is to enhance knowledge about insurance and to spread it across the country and across the world.
Hi everyone, my name is Mercy Kirima, AIIK, the CEO of Insurance Institute of Kenya. IIK is the umbrella body for all insurance professionals in Kenya. Our mission is to be the Africa leading insurance institute, and the mission is to enhance insurance professionalism through training, examination, certification, and research.
Hi everyone, my name is Electa Okech. I work at the Secretariat. I'm the manager in charge of membership and events management.
Jambo, my name is Bernard Kithinji, Executive Council member and also a member of the Legal Affairs and Professional Standards Committee. Our primary role at this point in time is to ensure that IIK gets legal recognition, and we are a heartbeat away.
My name is CPA Nancy Musili. I work at the Secretariat. I'm the finance manager.
Hi guys, my name is Sharon, and at the IIK, I am in the Member Service Committee as a member. What we do is to ensure that we add value to all the insurance professionals out there like you, and we are happy to have you on board as usual. Thank you.
Jambo Institute members, my name is Caroline Nairo, a chartered insurer. I serve in the Insurance Institute of Kenya in the PR committee. Basically what we do in the PR committee, we are mandated to do the public relations and the customer service bit of the institute. And I know that being a member of this institute is really going to add a lot of value, and we are here to bring change, and the change is here. Thank you.
Thank you so much, the Insurance Institute members and the Executive Council. At least now you know someone from the team, such that in case they are asked for in an interview, then you have details to pass across to the panel. Now, ladies and gentlemen, I wish to again take us back to an appreciation moment for our sponsors. This is the moment that, you know, when you're dealing with a sponsor, not in the context of the world out there and social media, but sponsor in the corporate aspect, there's a way you need to oil their hearts and, of course, make their hearts melt even in this cold season. And that is what we intend to do. So I will bring us again back to our sponsors in an appreciation to them all, starting with our gold sponsor. I'm sure the team is about to share the slide on sponsors so that we are able to appreciate you one more time as we continue to share on this beautiful day. Of course, our gold sponsor is IRA, the Insurance Regulatory Authority, an excellent team. IRA are the ones who have been the gold sponsors. You can inquire from the team. Now that you know even the Secretariat, you know the Executive Council, at least now you know where to inquire. How does a person become a gold sponsor? How does a company become a gold sponsor? We don't limit you also from being individual mega sponsors, because we understand that money is not limited in this Kenya. Even when we say we broke, you can see Bentleys on the road. So if you want to be a part of the sponsor, you can contact the team and know, and of course have your name also written here. Now, our sponsors, we will start with the gold sponsor, that is IRA. IRA are our gold sponsors, and we want to say thank you so much. I am waiting for the slide for the silver sponsors also, so that you are able to appreciate in a very special way our silver sponsors, our bronze sponsors. Wale ambao hatujaweza kuwa note pia, we will be able to note you in a very special way. So as we were saying, we also want to appreciate all the companies that have been able to share with us in terms of the people who have been able to send their delegates here. I said we don't take you for granted for having been able to share with us. So we are having our gold sponsor, that is IRA. IRA is our gold sponsor, and we want to say asante sana for the wonderful part of your work. Now, our silver sponsor, that is Africa Re. Africa Re, we say thank you so much for even participating and serving with us. We have AAR Insurance. AAR Insurance, we say thank you so much. I have been able to enjoy some of your services, and I can confirm that apart from being sponsors on such a ground, you're also awesome people in terms of whatever you are able to deliver in terms of service to your clientele. We also want to appreciate Madison Group. Madison, for being a sponsor in this. We say thank you so much, and continue getting blessed and of course growing in all bounds. Now we're going also to our bronze sponsors. We're starting with Waika Insurance. We say thank you so much, Waika, for the wonderful part you've done in sponsoring this. We have Sanlam. Sanlam, we say thank you so much, Sanlam, for the sponsorship. Zepri, we acknowledge you and appreciate your sponsorship. The Monarch Insurance, we appreciate the sponsorship that you've been able to offer. CIC Group, we say thank you so much for the kind of sponsorship you've been able to offer to us. We have Geminia, we say thank you so much. We have Direct Line Assurance. Direct Line Assurance are famous because most of our public transport are able to use Direct Line as the insurance firm, and we get to enjoy your services. So thank you also for being a sponsor in this. Kenya Re, we appreciate you for the wonderful sponsorship that you've been able to issue. Jubilee Insurance, we say thank you so much for the sponsorship. APA Insurance, we appreciate your sponsorship. Kenya Alliance, we say thank you so much. Minet, we appreciate your sponsorship. First Assurance, thank you so much for sponsoring. UAP Old Mutual, we appreciate the sponsorship. Fast Tree, we also say thank you so much for the sponsorship. We will continue appreciating you in a very special way and requesting that you consider also graduating next year from the bronze sponsors to the silver sponsors, because I know you have the capability to do so. It's only a little bit of profit and we will get there. So we'll be glad to see you on the category of silver sponsors. And of course, the silver sponsors will also be promoted so that they don't remain like Kenyan schools in the same class for 2 years. So you go to the gold sponsors. We appreciate you so much. So the companies that have sent their delegates, I know you had a role to play in this, and I may not be able to mention each and every company that has been able to sponsor their delegates to serve with us. We want to say thank you so much. So for the delegates also, wherever you're watching us from and sharing and listening, we don't take your bundles for granted. I am sure some of us are in those beautiful green hills of the city, and others are from the beautiful blocks around the city. We all appreciate you, and we don't take your bundles for granted, regardless of where you're getting your Wi-Fi from the neighborhood, from yourself, from your phone, whichever way. We appreciate you for being there with us. So we will be able to share a few slides of our sponsors, their products, and what they have with us. We'll also be able to run a few of the videos that we presented before, so that you are able to get a touch of what we have on this conference. I can assure you that whatever is in store in the next presentation is also going to be awesome. We have around 20 minutes to have our presentations, our adverts, and of course, we'll be able to also have a small break so that we can allow you to take your coffee break. I am sure you've been consuming coffee because your videos are muted, but you can still have a serious now legal coffee break as we are able to enjoy and resume for the next paper. We say thank you so much for joining us, and we want to appreciate you in a very special way for being with us. Back to the team to share some slides on the adverts. Now, I have seen the questions that have been presented under the Q&A sections, including the concerns that have also been raised. We will also share these questions with our presenters so that we are able to address them satisfactorily. And in case you find it still not satisfactory, we will be able to share an address whereby you can be addressed further, and of course get a relevant question to your relevant response to your relevant question, so that we are able to have an overall relevant society. So as we said, we are engaging in both platforms. In the chats, questions are on the Q&A section. The chats can be used to present any concerns that you have, and we'll be able to run the program together. As for the video that we said we had a lag in sound, we will be able to address that one, and in subsequent presentations, then you will be able to note that the quality will have been improved. So we say thank you for also communicating and engaging us, and we welcome you for those adverts. Karibuni sana.
Jerusalema ikayalami ilondoloze uhambe nami zungangishilana. Jerusalema ikayalami ilondoloze uhambe nami zungangishilana. Dawo yami wami awukholana ilondoloze zuhambe nami dawo yami ayikholana buso wami awukholana ilondoloze zuhambe nami Jerusalema ikhaya lami ilondoloze uhambe nami zungangishilana Jerusalema ikhaya lami ilondoloze uhambe nami zungangishilana dawo yami ayikholana buso wami awukholana ilondoloze zuhambe nami
That was APA with the Jerusalem challenge. I am sure other companies have been able to do, only that they were not there in social media, but we will be glad to see how you also managed. I am sure in the background, before that video came out, a lot of errors would have been done, but we still appreciate the final product that has come out. It is a lot of effort and hard work. Now we will have the video by Africa Re. They will be able to share the video with us, and then much later we'll have another video from another sponsor as we continue sharing together. Keep with us.
Despite the excellent performance of 2019, the COVID-19 pandemic cast a dark shadow on the prospects of Africa Re and the survival of the African insurance industry in 2020. However, in the midst of the crisis and disruption caused by the pandemic, Africa Re availed itself of its robustness, preparedness, and resilience to reward its faithful shareholders with the highest ever dividend rate of $8.8 per subscribed and paid up share, seamlessly implement its business continuity plan to continue serving its customers during lockdown, successfully adopt and roll out a very effective work from home policy, thereby enabling staff to remain safe and sound while supporting African governments to combat the pandemic. Achieve a very decent performance during the first half of 2020 with a much improved underwriting result and net profit. Keep adapting, learning, innovating, leading, and sowing seeds of a better future for the industry. This year, in 2020, Africa Re was able to maintain its financial rating at A- with an excellent stable outlook by S&P for the 10th consecutive year. Continue the training of up to 1,000 future insurance professionals through the Young Insurance Professionals Program. Remotely train its customers, insurance companies, brokers and risk managers in various insurance and reinsurance skills and competencies necessary to build the human capacity of the insurance industry. Engage with African regulatory authorities to carry out various initiatives such as mortality tables to improve the underwriting of life insurance policies, a new IT application to improve the industry statistics and transparency, organize the 2020 African Insurance Awards to celebrate excellence, performance, and innovation in the African insurance industry, offer a tremendous support of $3.3 million to the fight against the COVID-19 pandemic in Africa. The beneficiaries include Africa Centers for Disease Control and Prevention, the World Health Organization, major African cities hosting our 8 regional offices, and the 41 national insurance associations of Africa Re member countries. We were also able to obtain the re-licensing of its South African subsidiary by the Prudential Authority in June 2020 under the new South African Insurance Act. Launched the Africa Re Underwriting Agency Limited in the Dubai International Finance Center in August 2020. Continue the preparation for life operations in the South African market beside the non-life operations established since 1995. Improve its ranking to 41st in the top 50 global reinsurance companies of the AM Best rating agency. In Africa Re, we don't hesitate in a crisis. We remain professional, show sympathy, and demonstrate empathy towards all of our stakeholders. During a crisis, our DNA does not change. It takes us through the crisis. We still learn, care, lead, and win.
And 6th of November.
5th and 6th.
Either no, either that. 5th and 6th.
5th and 6th. Tupatane hapo.
5th and 6th.
5th and 6th. Tarehe 5, 6.
5th and 6th.
Tarika Beach, Tarika Wichel.
Niaje conference ni 5th and 6th. Msihate, msikose, msimiss. Sawa?
5th, 6th.
Taliki 5 nadhani tu.
So, 5th and 6th of November. See you there.
5th and 6th. Please register, log in, see you there.
We look forward to seeing you all on the 5th and 6th of November 2020. Please log in to the first ever IIK virtual conference.
Thank you. Thank you. This time I wish to bring us to our next presentation. And of course, our next presentation will be on surviving the COVID-19 crisis through digital transformation and creative utilization of data and virtual spaces. That is surviving the COVID-19 crisis through digital transformation and creative utilization of data and virtual spaces. Our paper chair is Mr. Ephraim Kiza Bichetero. Mr. Ibrahim, to mention the name Bichetero until he is able to guide me on how to mention it, holds a BA, that is Bachelor of Arts, from Makerere University, Executive MBA from USIU,
I'm aware that USIU students were voting in the American elections. So then we have Associate Diploma holder of ACII. Mr. Bichetero is the regional director of Africa Re Nairobi office. He started his career in 1994 as underwriter trainee in Pan World Insurance Uganda and rose to head the reinsurance department. He joined Gold Star Insurance Uganda as a head of underwriting, claims, and reinsurance in 1998. Then he later rose to become the general manager. He was recruited as head of technical operations in charge of underwriting, reinsurance, and claims in the then United Assurance Limited, now UAP Old Mutual Uganda, in 2002. He joined Africa as an underwriter in June 2004 at Nairobi Regional Office. He rose to become the Assistant Director, Technical Operations, and Deputy Regional Director. He was appointed Interim Regional Director in July 2017 and became Regional Director of Nairobi Regional Office. He has served as a member in many insurance technical committees in Uganda and Kenya. One thing I noted about Mr. Ephraim is his ability to grow from an underwriter trainee to this level of being a regional director of Nairobi Regional Office. So it shows brilliance, excellence, and of course, the readiness to grow and become better in the field. And I am excited to welcome him at this point in time. And of course, our presenter will be Dr. Dr. Tunde Salako is the one to do the presentation on behalf of, okay. So Mr. Ephraim Bichetero, it is my pleasure and privilege to now welcome you to, of course, chair this paper and welcome your speaker for the day. Much welcome, Mr. Bichetero.
Thank you, MC, and good morning, everyone tuned in, and our chief guest, the Commissioner IRA, and the CEO IRA, the IIK Director, all distinguished and invited guests, the speakers for the conference, the paper chairs, our colleague in the industry, please, and all protocols observed, all who have tuned in, you are appreciated. And I also take the opportunity to thank IIK for arranging this conference during this time. And as I've heard, it's the first virtual ever. And I think it rhymes with the theme for the conference, resilience and thriving. And I think this is a testimony and evidence of that resiliency and thriving in the uncertain times of COVID. And I also want to pass on our apologies. Actually, this paper was supposed to be chaired by our group CEO, Dr. Cornel Karekezi, but for some reason he got tied, but he passes regards, and also you accept our apologies. I don't want to take a lot of time. We have an exciting presentation on survival, the crisis through digital transformation and utilization of data creatively. And I think just a comment, generally, I think we have, as an insurance industry, we've been known to be laggards when it comes to technology adoption. And I think COVID-19 has thrown us in the deep end and showed us that we can no longer put this on the back burner. I think we now all realize that it's something that we really all need to embrace. And the speaker today, I'm sure he will do very good justice. And I'm privileged now to introduce Dr. Tunde Salako. I'm sure, I hope I'm pronouncing the name properly. And Dr. Tunde Salako is an insurtech entrepreneur with experience in the business of engendering access to insurance and healthcare locally and internationally. His background and expertise has obliged him the privilege to have cut across several industries spanning insurance, health, and more recently, data science. He has worked with both local and international professionals at C-suite and board levels on diverse missions channeled towards achieving specific goals. Tunde's interests cut across technology, innovation, and business process automation. He's passionate about the use of tech to galvanize inclusion in the insurance ecosystem, hence the birth of the platform Africa InsurTech Rising in a bid to nurture the insurance technology space. This platform is an aggregator of participants and stakeholders in the insurtech space with a focus on the African insurance sector, passionately reverse engineering insurance inclusion on the continent via technology. The platform is the official insurtech partner to the Africa FinTech Network and partner to Queensland Insurtech New York, Insurtech Story India, amongst other notable organizations. He's also co-founder and CEO of an insurtech company, Hadiel, which is a software as a service, a platform accelerating insurance inclusion via technology and data science in Nigeria and Kenya. This insurtech startup is a member of the Insurtech Hub, Munich and Barcelona Health Spain. He's an alumnus of the prestigious College of Medicine, University of Lagos, the Imperial College of Business School, United Kingdom. Currently, he serves on the board of ERET Incorporated UK and Insurtech Mentors UK. In the past, Dr. Tunde also served as an advisory board member of the Imperial College Business School alumni board between 2015 and 2016. So we have a well-able presenter to speak to us on this inspiring and challenging topic. And please allow me to welcome our presenter, Dr. Tunde Salako, please.
Good morning, distinguished ladies and gentlemen. Thanks very much indeed, Mr. Kiza, for the introduction. It's a pleasure to meet you. Permit me to stand on existing protocols. Good morning, directors and management of the Insurance Institute of Kenya. Good morning, the IRA CEO and chairman, and every other panelist on board. Good morning, distinguished delegates and attendees. I'm humbled to be in your presence this morning. And we're going to quickly just walk through from what Mr. Kiza said, my own part, in this conference. It's interesting how this is happening because I'm sure we're all attending from different parts of the world and we're able to make very good use of it. Excellent presentation by Mr. Charles earlier. I listened in with very in-depth understanding of what is going on within the space. And it seems to be that these are a sort of like a universal outlook, particularly because of the COVID-19. Now, just before we delve straight into it, let me try and pull up my screen. I'll be walking you through digital transformation in the COVID-19 era, and I'm going to try to go through this format of starting just introducing who we are and sharing a little bit of perspective of what is happening in Africa, particularly with the COVID-19 as a continent. And then we'll look at the emerging trends, after which we'll now talk about the insurtech trends. Then we'll try as much as possible to go through some use cases and then some examples, hoping that we have enough time, but I believe it will be well time spent. So please pardon me while I bring up my screen. Just a second so we can delve straight into it. Okay. Okay. So I'm aware we have just about 40 to 45 minutes, so I'll try not to bore everyone. Very interesting time for all of us as Africans. Now, a little bit about my background. I'm foundationally a medical doctor, but I found myself to be on the insurance side of the fence for the past 18 years. And because of that, to cut the long story short, one of my passions is about seeing how we're able to re-engineer the concept of insurance on our own dear continent. And that's what has birthed Africa InsurTech Rising. And so this is a platform that is galvanizing entrepreneurs, investors, business angels, corporations, enthusiasts, evangelists. And we're doing this sorry, I think, can we mute our mics, please, so that we don't get distracted? Thank you. So we're on a mission to propagate the unique African narratives in pursuit for insurance penetration and inclusion by showcasing the kind of resilience and innovation. And we envision that within the next decade and beyond, we're going to be able to make cons, and take our place on the global stage. More often than not, you hear about Fortune 500 companies doing this. They're coming from different parts of the world, but we're very optimistic that with the advent of technology and everything that is happening, this is something that is going to, create a very, very, very significant change. Now, going straight into it, in terms of the current situation, right? Mr. Charles shared earlier a global perspective of what is happening. Narrowing it down to Africa, as of October 15th, we seem to have seen a total confirmed cases of 1,605,581 cases, out of which 1,322,441 recovered. Unfortunately, we've seen just over about 38,000 deaths, which is a high number. And we see that the different, as you can see on the screen, the different mapping in terms of the cases, vary from country and from region to region. And that is for a lot of cases, use cases. So for instance, some countries are testing more than others. There are different factors that are playing. South Africa seems to have the highest number of cases at the moment, exceeding just slightly above 560,000 cases. But it could be because they're doing a lot, they have the capacity and the capability to give a lot of significant testings, But that said, it's not even about who has the highest number of cases or who has the lowest number of cases. It's about the impact that this has caused on our continent. And I'll tell you why. It's interesting how the world was looking at Africa as the continent that was going to face the worst devastation with this pandemic. And thankfully, that has not been the case. It seems to us that we're doing much better, and this is not about a competition or a comparison game, but from the numbers of what we can see, we're doing better than even some other mature systems and mature places, in the different parts of the globe, And what we've seen between late February of 2020 and as of today, at the end of October 31st, coming into November, is we've seen different parts of the continent, our dear continent, Africa, responding in very, very unique ways. And one thing that I see that is universal, right, that I've come to realize is that these responses are not coming out of, they're not coming out of sheer, oh, we need to respond. They're coming from a deep-seated and deep-rooted place of innovation. And that is the key of what we're discussing today, coming from a deep-rooted place of innovation. Why do I say so? We've seen different kinds of responses cutting across from South Africa to Ghana, to Kenya, to Tanzania, and in Nigeria, right? Looking at South Africa, they partnered with their government and one of the biggest health insurance companies, which is called Discovery, partnered with a telecom operator, Vodacom, to provide free telemedical services and telehealth services to all South African indigents. right? That's something that was accelerated because of this pandemic and probably won't have been able to happen until maybe 3, 4, 5 years down the line. In Ghana, with the Ministry of Health, with some startups, they were able to create a contact tracing application that would engender all the citizens to be able to know which areas are high risk versus low risk or medium risk as regards to visiting for during this period. Now, imagine you knowing before you step into a particular zone or area, you knowing upfront that this is a high risk spot, and you're not working with assumptions. You're working with something that is driven by scientific derivatives, by technology. That's what they've been able to do. In Rwanda has been fantastic, and they brought in drone technology to be able to empower people in the villages and in the suburban areas and enlighten them about what is happening with the COVID-19. Additionally, they have introduced the concept of robotics into caring in their hospital, meaning that they're protecting their health workers and they're using technology, to give access to care. Now, in Nigeria, we have different things that have happened with the Federal Ministry of Health, with the Lagos State Ministry of Health, the Nigerian Institute of Medical Research. We have symptom checkers, we have chatbots, telehealth has hyped. There's a lot that has happened, in terms of technology bridging the gap. And so that brings us back to the fore of why we're having this conversation today. It's about how technology, how innovation, how creativity has been able to bridge the gap and help us, to maneuver as we continue to fight and battle and respond to the COVID-19 pandemic. Now, unfortunately, from what we hear on the news and everything, the COVID-19 is still here with us for a while. That's what we've been told, right? And evidently, we can see that playing out because in other parts of the world, they're starting to experience what we call a second wave, which means that the virus is beginning to show up with higher numbers and higher incidence cases, afresh. In Europe, cutting across Germany, Belgium, France, UK, they have all instituted a second lockdown. And if we look at America is facing its own challenges, despite the fact that there's an election, which is ongoing. Numbers are increasing, and so restrictions are being put on a state-by-state basis. In China and in Asia, where this seems to have originated from, there seems to have been some form of stability. In Africa, we can't say we're clearly out of the woods. The infection numbers and the confirmed cases have not gone astronomical from what we expected. But we're thankful for where we are, and we hope that we will keep it that way because we don't know what's going to happen. It's going to be a very pivotal month, next couple of 3 to 6 months for us on the continent. And so while looking at this, it's important that I'm sure, as organizations and as individuals and families, we're maintaining, social distancing, and we're keeping all forms of safety measures and going out just on a need-to basis. This is going to pass, right? And it's very evident that what has happened has accelerated innovation within the digital and technology space. Now, if you see my screen, this is just a snapshot. Let's not get overwhelmed by everything that is, popping out here. But this is a snapshot about the kind of technology, that is likely to happen within the next 5, 10, and 15 years. Now, fortunately for us, even in Africa, one of the things that we see that has happened, to give a little bit of context and background to this, is the fact that there's been a significant acceleration in bringing some of this trends and technology and digital advance to the fore. Now, what of some of the things that would have happened in 5 years have already happened. In 10 years will happen very soon, maybe in the next 3 to 5 years. In 15 years will probably happen within the next 7 to 8 years, right? And so this is just a diagram of showing the core, of the different trends, which may all sound like buzzwords, but as we go on, we're going to be able to, touch base on some of these key points, so it's not all overwhelming, as insurance specialists and experts, if we look at this spectrum, one of the things I'm personally very excited to see about is predictive underwriting solutions. If you can see where my cursor is, which is projected to be in the next 10 years. But guess what? We're seeing that this trend is much, much closer because we're seeing different solutions and different advents of things that are beginning to bet this to the fore. So without further ado, as we delve into it, there's a very, very insistent need for insurers to engage with a program that is going to accelerate digital transformation, because a lot of things that we didn't see happening pre the COVID have already gained traction. And the future of insurance to, lie in the adoption of insurtech. And with data analytics, the advent of different trends, which we're going to talk about very soon, we're going to see how, as a continent, we continue to respond to this crisis and the opportunity continent in terms of our creativity and our technology, right? Because that has happened is we're now becoming a global community along with the rest of the world. Our voice is being heard nowadays, and a lot has been closed because of two significant reasons. The first one being the fact that the advent of the ability and the capacity to invent and code our own technology, which like 10 years ago was almost mission impossible. 10 years ago, or even 5 years ago, for you to get a very good platform or a technology solution, you would have to outsource to India or to China, to save cost. And if you really wanted a top grade, top of the notch service, you would have to probably venture into maybe the United States or into Europe. But that has changed. And the reason why that has changed significantly is because we have that advent. We have the capacity and the capability because of the boom of the internet access and services, the growth in the capacities to understand coding at even primary and secondary levels. And also, now everyone is looking inwards into the possibilities of investing in Africa, because Africa is where, you can bring things. There's a competitive advantage of having, should I say, for better choice of words, a placement over regulatory issues as you would have in US, in Europe, or in China, right? And so without further ado, if we delve into it and we look, this slide is just talking about how do we now leverage technology and our ecosystems, right? And I want us to look at this from the array of the 5 things on this screen. Number 1 being innovating for value beyond insurance, which is what we're going to talk about today. Number 2 is how do we have an improved data management and predictive system, to enhance decision making. Number 3 is how do we use these ecosystems that are birthing up now with the cross-section between technology, insurance, and increasing penetration, to deepen our systems and our core in Africa. And number 4 is talking about the Internet of Things, right? There's a lot of technology going on now, which we'll talk about very soon. And then number 5, finally, is how do we optimize these processes and automate, cutting across the different sectors in insurance. Now, very quickly, if we look at this slide, it's talking about the emerging trends in insurance. I'm going to go this format as to just highlighting this, and then we will now go into talking about the insurance technology trends, which is number 2, which is the key focus of what I want us to focus on today, because we're insurance professionals and we need to look, within and ask ourselves certain questions as we continue to respond to this COVID-19 pandemic. So the first trend is digital. The second is insurtech, which is a short abbreviation for insurance technology, just as you would have fintech, which is a short abbreviation for finance and technology. Number 3 is blockchain. Number 4 is artificial intelligence and robotics. Number 5 is IoT, the Internet of Things, which is essentially the same thing as connectivity within internet-enabled devices. Number 6, and the next set of things are more of like regulatory trends, which has to do with things like on climate change, directors and officers insurance, what we call the IFRS 17, royal commissions, and outsourcing and managed services. So when we look at digital, right, we're in a digital age and we talk about who we call the 21st century consumer, the 21st century user. The 21st century consumer is someone who wants fast. It's someone who has snob appeal. It's somebody who has style. It's somebody who has who wants speed. It's somebody who wants convenience. And you will agree with me that when we look at 2020 and we look at 2000, I want to believe that most of us on this platform and on this conference now, I mean, have been fortunate to have crossed between the last millennia to this particular millennia. And what has happened is, you're finding that there's a very, very rapid change in consumer appetite. And so for millennials, or who we term as the Generation Z, who were not born, before the year 2000, they don't understand when you are trying to explain to them how they're privileged to be in an era where the consumer has changed, right? And so, for example, so a little bit of digression. I was talking to my 8-year-old daughter who was trying to work through an assignment with me last week. And I said, well, you probably have to look at this properly. You read it, check it out in the book, make references. And she asked me a very question that, why do I like hard life? In simple terms, hard life. I said, what do you mean by that? I said, look, life is not that hard. Life is, we're the soft life generation. These things you're asking me to do, I have Googled it already and I've watched the video on YouTube. And so I don't see why you're asking me to take pen and paper before I understand what it is I'm talking about. That is the truth. Fortunately or unfortunately, when I was in school, there was nothing like YouTube. There was nothing like Google. You couldn't make references to anywhere. You had to, deep dive into your books. And if you couldn't afford the books back then, you had to borrow from someone who could afford, or you could borrow from the local library. But that's to show you how, there's been a wide disparity between people who were born, before 2000 and after 2000. And it's the same thing that has happened with the enablement of technology and business models, right? And so the way the 21st century consumer is being engaged, the way the nature of services which they receive, and the workforce is also changing. And we have an enabling technology ecosystem cutting across mobile, what we call augmented and virtual reality, data and analytics, blockchain, APIs, cloud, platform as business, drone technology, 3D printing, which is an amazing phenomenon. All this fall under the concept of what we call a digital trend, which we've seen coming to the fore. Some are mature now and some are just maturing and will continue to mature over time. And now, so where the opportunities lie, for us as insurance professionals and experts, is that there's what we call a traditional pyramid that boxes the incumbent insurance practice with digital insurance practice, as you can see on my screen. And what's going to begin to happen is that we're seeing a transition from where we have traditional incumbent services to a digitalized fraction. And the opportunities that are there is the fact that, number one, you're able to get to a situation where you can create on-demand and episodic use cases, right? And so now you can subscribe, you can have products that people can pay for as little as per day, per week, etc., which wasn't possible before now. Now we're having utility situations where, you have cloud-based insurance as service modules, right? We're also having automation from end to end, and so one of the critical things that is important is that in order for us as insurers to be able to excel, we need to balance innovations between our traditional triangle, which you can see here, right? And the digital triangle, because it's a digital world now. Let's not forget, the 21st century consumer likes what? Fast, speed, convenience, snob, style appeal, and all the good things. We're in the microwave era. That's what it is. Everything has to be boom, 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 boom. And that's what's happening between the transition between traditional and digital. Next, we'll talk about insurtechs, right? Those are companies, corporates, startups, as you will call them, that are galvanizing insurance and technology and bringing them together, in a sweet spot to be able to accelerate what is happening with traditional insurance companies. Now, here's the thing. traditionally, insurance companies are doing a lot of heavy lifting, right? You will do your administration, you will do your underwriting and actuals, you will do your IT core bases and software systems. You will do everything, within one company. And what the insurtechs are doing now is they're coming to take up the different parts of the key areas of insurance, with the new technologies such as artificial intelligence, to different areas to insurance practitioners. And so what that Hi.
As we get Daktari back.
Yes, I'm back. Sorry, I think I lost connection there.
Oh, welcome back, Daktari.
So I'm just going to quickly, I think I lost about a minute there. So I'm just going to quickly dive into the other areas so that we don't waste time. And hold on a second, please, while I share my screen. Okay. So I was talking about blockchain and the concept of blockchain and what it is as a digital ledger that is combining, different parties from being able to get access, to a digital ledger. And there are very many use cases that this is able to create, for us as insurance. For instance, in travel and life insurance, personal accident insurance, in record keeping, and what we call digital identities. Imagine where you're able to just have digital ledgers that will validate customer information and improve compliance. You don't have to be going through the filling of the forms and the traditional writing and putting everything together. That is what blockchain technology is able to do in insurance, and that's already existing even in Africa here. Now we talk about the concept of artificial intelligence and robotics. Let me put up my screen so that it's clearer. Yes, I think it's coming up now. What this is doing for us is, number one, it's able to increase agility and speed for us. It's able to improve customer experience. It's able to improve data and analytics capability, and it's able to improve risk management. So when we hear artificial intelligence, machine learning, to simply put it, it is just the principle and the concept of letting a machine get the same level of intelligence we as humans we have to be able to complete tasks on our behalf. Simple. And then machine learning comes afterwards, because once you empower the machine with the intelligence, that machine continues to learn over time, and it becomes more intelligent and has more capacities than even we, the human beings. And so if we look at it in simple terms, it's like saying that I empower my staff, or I empower or outsource someone to do this job for me. Once I give him the basics, he's even going to learn better as to how to administer this job and give better solutions. There's no reason why we should object that, because obviously, evidently, that's the future. And then we have what we call the Internet of Things. Internet of Things simply is just simplifying connections between empowered internet devices, right? Today we have connected cars, we have connected homes, we have connected lifestyles, right? And in insurance, that's beginning to happen, where you're able to connect an empowered and enabled IT device which has access to internet, to your healthcare to track what's happening per time. For instance, there are many devices that we wear on our hands and our wrist that can check our blood pressures, check our heart rates, and check exactly what's happening per time so that we're able to keep our par in terms of our health. And what is beginning to happen is these devices are now able to make connections to insurance. And that's where we have the concept of, for instance, in connected cars, we have what is called telematics, which I'm sure we're all familiar with, which is essentially a use case where insurers are now able to predict, give insurance based on the behavioral patterns of a driver within car. So connection of things, Internet of Things is a very key trend, which is available to us now. Now, very quickly, I will quickly talk about the InsurTech trends, right? Because again, this is about having gone through the digital trends, right? Moving into the InsurTech trends, which is the key and the focus of our discussion. It's important for us to understand that as insurance professionals, these trends are no longer just buzzwords. They're no longer just fancy things. They're things that are here to stay and going to help all of us as practitioners in making sure that, number one, we adapt very, very swiftly to the new normal, which is what we call it now. Life after COVID. COVID is going to go eventually. We don't know when, but life is not going to be the same. So how do we adjust to the new normal, particularly with what is available to us as a continent, as a country, as a system in our organizations? So number one has to do with customer satisfaction. Again, this goes back to the first thing we talked about, which is the digital customer, the 21st century consumer. Number two has to do with mature insurance markets, where, for instance, we're having microservices and micro solutions. Now, one of the critical things that this has been able to do is for we as insurance practitioners to look inwards and see how can we take different bits and pieces of the kind of solutions which we're rendering as insurance service providers or insurance carriers or brokers or agents, as it were, and take those critical components in smaller levels and offer them as a blended solution, to our end users and our target markets, right? Number three is when we talk about the advent of claim settlements. So claims is one very instrumental and critical point when it comes to the ecosystem of insurance. And now we have a lot of technology and trends, some of them which we'll look after, that is aiding and abetting, acceleration, particularly within this COVID period. And these technologies are here to stay. Health ecosystems, right? I talked about the Internet of Things playing a role in what happens to us as individuals, how connected devices are now being connected to our health. We'll talk about the concept of wearables and IoTs. And then number five, we're talking about the concept of being able to change and flip the script from business as usual to trends that accelerate customer acquisition, right? For every organization, one of the critical things that we keep asking ourselves is, how do we want to increase customer acquisition and decrease customer churn, right? And so those trends we'll quickly highlight very soon. Six is talking about data, right? We have data and analytics and data science. 3 years ago, these were all just buzzwords, right? And traditionally, we know that insurance has always been perceived as a game of probabilities, a game of guesswork, a game of just hoping that it doesn't happen. But what has happened now more than ever is because data, which we know we define as the new oil, we know is gold, is doing a lot of heavy lifting, right? And what insurtech companies, startups, and corporations, as it were, are able to now cater for us on data is the fact that the critical components of all our businesses as insurance professionals and service providers, data can take off a lot of heavy lifting, and we're able to actually come up with trends that we never saw, for donkey years. Now, what data is able to do for any business now in the insurance is be able to bring three elements to the table, which is the diagnostic element, the prescriptive element, and the predictive element. Now, imagine a scenario whereby your organization as an insurance provider is able to detect upfront. It's like you having your own crystal ball. You're able to see beforehand what happens? Hold that thought before you even register a subscriber. Imagine if you're able to just pause and just say, oh, okay, I'm going into my crystal ball now. I just want to have a look and say, is this customer good for me or not? Will it have bad utilization? Am I going to play out claims? What's going to be my medical loss ratio? What's going to be my claims ratio? What kind of loss adjustments, right? Imagine if you had all those answers upfront just before you signed up corporations, organizations. What that does is it creates an endless world of possibilities where you are able to break down into molecular strata, classifications, and say, in this area, you know, even from a public perspective, we can serve these people this way. We can create the solution to meet these people this way. We can do that. It gives an endless world of possibilities. And that's why, more than ever, I believe very strongly that this is the time for us to deepen penetration and inclusion on the continent of Africa. We account for 25% of the global population, having a population of about 1.2 billion people out of 6 billion people in the world, right? And the irony of it is the penetration of insurance on our continent with these large numbers is just not more than 2%. That needs to change. Now, talking about artificial intelligence and machine learning, we talked about that earlier. Artificial intelligence, you know, sounds like a very, you know, when you just hear AI, people say, what is this AI? It's very simple. It's just the simple concept of passing the human intelligence onto a machine, and then the machine begins to continue with its own internal programming and coding that it has been built to become more intelligent, period. That's just what it is. And that value chain is bringing a lot in the concept of prediction, data science, analytics. They go hand in hand. Finally, the last three trends will be in what we call telematics, which is in auto coverage. Those are things that we're already seeing, and I'm hoping that I'll be able to share some of those examples because we're fast running out of time. Those are things that we're seeing even in Kenya, right? And I have examples. I'm working with quite a couple of different corporations in different parts of the world, and one of them is actually based in Kenya, doing phenomenal and fantastic stuff in the space of telematics, which is auto insurance coverage, right? What this is being able to use technology to predict, reward, control the kind of patterns of what is happening within, you know, the auto insurance space, right? And so with the advent of telematics, what this does for those of us in the auto insurance space is we're able to plug in and de-risk different catastrophes that can happen beforehand just by plugging in API software solutions that can track and monitor the behavioral outcomes of particular subscribers. That is phenomenal. It has started, it's going to get better, right? And we'll talk about that a little bit later. Then big data. When we talk about big data is just simply data being mined from the different areas, from social media, from third-party data, all being culminated under what we call a data warehouse, where it's going to be mined and churned out and can bring down different micro elements of what we could not even see. It helps to extract insights, right? And so that's why we have things that we call predictive analytics now. And that's a very big area for us as insurance practitioners, because when you're able to predict before it happens, you are de-risking your business. It helps you in shaping your benefits. It helps you to be precise about your pricing. It helps you to eliminate your risk. It's flipping the game from, oh, insurance is assuming it doesn't happen. Why do we need to assume something is not going to happen or will happen if we have a way of checking and being sure? It's like saying you're going for an exam and you're able to see the questions just before you walk into the examination hall. I mean, by the way, that's malpractice, but you know, this is a legitimate form of practicing to understand your business very well. And that's what big data is doing. And then of course, we have the combination of how number 10 trend, machines are augmenting human capital. We're only humans, right? What is happening now in the space because of the COVID-19 is a lot of people have been laid off, people have lost their jobs. Companies are now looking inwards and saying, hey, do we really need this person? Do we really need that person? Okay, why don't we just have a program? Why don't we just outsource this? But the truth is, that's the imminent future, right? And so for all of us on the platform at this moment, what is imperative is that we continue to understand how we can improve and match our skills, right, and close it with the technology gap so that we're relevant and we remain at par. That is something that is very, very critical for us to take away. Now, moving very quickly, because we're running out of time, this diagram is the key to what we're talking about. I like to call it the digital ikigai, right? Very quickly, what is an ikigai? What is your ikigai? Ikigai is a Japanese term that was coined from a principle and somewhere in Okinawa in Japan, where traditionally we still find out up till date, that's where you have the people with the highest, number of ages in terms of their life expectancy. Everyone in that place lives above 100. Why? Because they're able to get the intersection between what's their passion, their vocation, their mission, and their existences to create their purpose, right? And so the interjection of where all those things meet to have a purposeful and meaningful outcome is what we term as ikigai. Now, coming to applying it to insurance, when we look at our financial model and how we're operating as an insurance provider and a business model, that sweet spot that we can see on the screen here, the digital, right, is what we call the sweet spot, our digital ikigai. That is what we need to be asking ourselves now as insurance professionals, as agents, as brokers, whatever it is. How does our financial model, operating model, and business model come together to create that sweet spot for us? And in order to do this, moving very quickly, there are fundamental questions that we need to be asking ourselves. Number one is, how ready are we as an organization or as a system? And number two is funding. So when talking about organizational readiness, we need to ask ourselves, how do we analyze our organizational strategy and identify what kind of these emerging trends and technologies we've talked about will complement us to maximize impact and value? The number two critical thing we need to ask ourselves is, how do we identify the policy holder, the risk, the strategy, and financial outcomes? And three, how do we consider digital programs that would develop a clear and sequenced roadmap for our organizations to buy in, or what we call a team buy-in, right? These are questions that we need to ask, right? And if we haven't taken anything out from this presentation, please, I want you to just pause and reflect on these questions that are coming up on the screen now. Number two is funding. How do we secure funding? Especially because, these are unknown risks. Do we have the funds? How do we have that clear roadmap that combines a proof of concepts? So the question we're going to be asking ourselves here is, how do we know we're getting value for our money? What's the return on investment? How do we set up this journey to be self-funding? In other words, how does it become sustainable afterwards? Number three is, in terms of risk management, we need to ask very empirically, what new risk and compliance issues are we introducing to our organizations? How are we going to manage them? Then, what is the impact to the entire organization's risk profile, right? Because we're in the game of insurance, we manage risk. We need to be able to de-risk up to a certain level whereby we have abysmal risk that we can even overlook. And that's what technology is aiding and abetting as of this year, 2020. And that's what COVID-19 has actually accelerated. It's given us the opportunity to know that, look, this is endless. I'm here, I'm in another country, and I'm able to join very brilliant and fantastic minds without having to travel and commute and have a meaningful session with you. Now, finally, in terms of capabilities, how are we building our workforce to be more diverse and learn digital and technology skills? Number two, how do we leverage external emerging technology situations, trends, or experts to build internal core capabilities through knowledge transfer and collaborations? Those are four critical questions that I pose to the panelists and the delegates, and I want us to resonate on this and think about it. It's something that whether you're an agent, you're an insurance broker, or you're a large size corporation, we need to sit down and ask ourselves these critical questions and look for how we start to migrate our changes, from traditional to the digital. Now, some of us have embarked on this journey already, but we need to accelerate it, because what has been proven is the world is not waiting for anyone. And COVID has actually usual moving forward, even after. So I'll quickly talk about use cases that we've seen here at this point. We have, Hadiel Medictor is a platform that, is galvanizing, it's a software service platform and a digital insurance platform. It's galvanizing a lot of solutions which are to improve and increase penetration and inclusion in health insurance in sub-Saharan Africa. But however, for the purpose of this presentation, is just to share a use case of what happened with a partner company called Medictor, and that's why it's called Hadiel Medictor, during the advent of COVID-19. Excuse me. So, as you can see on the screen, this is a symptom checker. This company was able to build an artificially intelligently driven symptom checker that will not only categorize the risk of possibility of people having COVID or not, but would additionally give what we call differential diagnosis in medicine. That is to say, person A could have COVID, or it could be something else. Now, before COVID, you would have needed to go into the hospital to be able to decipher this. Well, guess what? When COVID was in full-blown effect and during what we call the first wave in March, people were running away from the hospitals because it was perceived that even if we got into the hospital then you're more likely at risk to getting down with the COVID. And so situations like this were the opportunities that were presented. Solution is an AI-driven, very intelligent chatbot that will collect clinical symptoms, reveal differential diagnosis, as I said. You can print your personalized reports from it. And it was a Pan-African thing that was deployed in April specifically. Another use case is a company called Floatbot, which is one of my clients that I'm working with. They're based in India. And they're using deep technology to combine a lot of, these trends we've talked about, which are actually here. They're no longer buzzwords, right? They're using NLP, what we call NLP, neuro-linguistic programming, with machine learning to change things to your local language, voice biometrics, all those things have been brought to the fore. And they've been able to develop what we call a complete conversational artificial intelligence suite for insurance. So whether you're a carrier, an agent, or a broker, excuse me. So with different use cases, such as the digital, how to automate customer support, automate claims process, health and wellness engagements, contact centers, and insurance renewals. These are the use cases that this company has been able to create, and they're actually available, to the public now. So imagine where you have a call center that is fully automated. People don't have to risk their lives as to how they're going to commute to a physical building to get into a system and wear gadgets and everything, but it's fully automated, right? Now, of course, definitely what this has done is shifting a lot, because part of the places where the solution has been deployed, what had to happen was, so the call center, for instance, for a company was closed down. They just said, look, there's no point, and so some of the people in those call centers were employed in other divisions of the company and were put to better use, and you can see for the use cases on the screen here, they have a 50% increments in digital sales. They've had 500% qualified leads, and it decreases the customer support cost internally by 60%. Right? And now, without any particular recourse, I'm just using this as an example because these are cases that I know very well and that I have personally been a part of. The transformation that we're looking at is not about laying people off or replacing people with technology. It's actually humanizing technology, because imagine if you look on the screen here where you're able to have a 90% increase in agent productivity, increase your qualified leads and digital sales. Those are the kind of trends that we're seeing in the insurance technology space now that are real and available, across the globe and even in Africa. So as we wind down, I think our time is almost fast spent. As we start to wind down, so some of the examples for the insurtech trends that I had mentioned earlier, are on the screen. For customer experience, we have a company called Flamingo that uses artificial intelligence to predict customer behavior. I mean, that's just fantastic. There's a company called Zhong'an, which is the largest online insurance company in China. And they basically don't have any interface, any physical human interface with any of their customers. And they're able to provide and deliver service more than at an excellent level than traditional physical insurance companies, right? Now that's the future. We know China is light years ahead, even with the other parts of the world, the US and Europe, China is always light years ahead, right? Talking about ecosystems, we have an example of, China again is leading the pack, and this is just to give a sort of a context of what's happening around the globe. China is leading the pack very clearly in building conventional ecosystems within the insurance space. There's a company called Ping An, is worth about $217 billion, is the biggest insurance company in the world. They're doing phenomenal stuff in building embedded microsystems with APIs, micro solutions and services in China. Again, Zhong'an is another example. Now, in terms of claim settlement, we have a company called Lemonade, which is a very interesting example because when we're talking about insurance technology trends, right? Lemonade is a company that started in 2015 in Israel and, made way to the US, and boom, the explosion was just something else. They went IPO in July 2020, and now they have global footprints, right? And, at an interview with the CEO of Lemonade, which I watched about last month, one of the things that he said, which was very funny, was in California, in America, they have the highest number of their subscribers, millions in that city. And ironically, in that city where they had the highest number of subscribers, they had just one staff. Every other thing was digitalized. That is the future of what insurance technology is bringing into the space. Trav is another example in claim settlements there. In terms of health insurance, we have Babylon, which is even embedded, a UK-based company, which has a contract with Rwanda for the next 10 years. And they've embedded, and they're changing the narrative and the system within what is happening, in that space. Now, Rwanda, is another space to watch out for because, they're taking a very, very fast pace in technology adoption, as well as Kenya is as well. Hagel, my insurtech company, is doing a lot with data and analytics and behavioral predictions in terms of patterns, within the insurance space. Vitality, very interesting company that rewards people when they are healthy. Now we have micro solutions, digital that we've been talking about. Of course, we have the lovely M-Pesa solution in Kenya, which I don't need to talk about. Micro-Insure, doing fantastic stuff. In fact, Richard Leftley, fantastic as the CEO and founder of the company. I'm sure he's going to be speaking tomorrow. He'll probably be able to speak more about that. But what they've been able to do is to break down solutions to a molecular level across different countries. I think they're operating in about 21 countries, and they keep growing better and better because of these solutions. Number 6, data. We have Apple Healthcare. For those of us who are Apple users, we know what Apple is doing with data these days. Pi Health, artificial intelligence and machine learning, a company called Policy Bazaar. Curacao, a company which is using AI technology, to prevent fraudulent claims, just like Shift Technology as well. The concept of telematics, which I mentioned earlier in auto. In Kenya, there's Griffin Motor Insurance app, which is run by an amazing young lady doing phenomenal things in connecting telematics to car insurance. Amodo is also another company which is using behavioral data. And then in concept of big data, we have a company called Latos, which is using image-based underwriting. Now that's some futuristic thing. We have Various, which is using analytics, and then we have Hostel Labs, which is a property insurance solution that uses phone imaging of just taking pictures to be able to assess the risk a property has. Now that's changing, major game-changing stuff. So in conclusion, I'd like to say that, we've talked about this. This is something that we can't really, just finish in one day. It'll be interesting to continue having these conversations offline. What is critical is the future is here. I don't know if anyone recognizes this picture, but if you were from the other side of the generation, like I am, I think this movie was released in 1987, right? It was called Back to the Future. You can Google it, and it's fascinating what happened in that movie. It's the fact that these guys were able to time travel from their current situation into the future. And they saw a lot of things, that the way the world had changed and the way technology had, shaped everything. And when we watched that movie growing up as a teenager then, it sounded like madness that, look, these are things that are not possible. Right? But I remember that movie, and that's why it's on the screen, because the things that they predicted have actually come to the fore. And so where we have a combination of machine learning, artificial intelligence, IoTs and wearables, data science and analytics, all of these things, the collision of this technology is what is going to cause transformational impact in the insurance industry. So I implore us to please let us embrace this. Let us start to have our own audit mapping towards how our companies, our organizations, our agencies, our brokerage companies become digitally compliant, because it's inevitable. These things are supposed to accelerate who we are, make our organizations more profitable, decrease customer churn, and increase customer profitability. I want to say thank you for your time. I hope I haven't bored you too much. Looking into the future, this is our LinkedIn contact for Africa InsurTech Rising. I'm very active on LinkedIn. That's my LinkedIn profile. Please send me an invite or request, and we can continue these conversations offline. I take connections every day. I'm very active on it. That's my email for any questions we can't take here. And for consultations, InsurTech mappings, or organizational retreats, InsurTech bookings, please send an email to joe@africainsurtechrising.com.ng. It's been fantastic talking to everyone. I wish us all a safe year, and look forward to future engagements and speaking with you. Thank you very much indeed for your time.
Thank you, Dr. Tunde. Thank you for an excellent presentation, very engaging, inspiring, challenging, and also a lot of questions on what we need to do and whether we are able to. I know we've overrun our time, our slot, and I'm sure the next presenters are eager to come on. But we have a few questions, I think a couple, maybe just to give you an opportunity maybe to respond to at least quickly. One, there's a question that are we in Africa prepared for robotics when you have a big problem of unemployment? And then we also have another, I think it's a comment with a question also, an observation with a question. Most insurance companies have legacy systems that make it difficult to move forward digitally, despite all evidence showing that is the future. How can we overcome this barrier?
So thanks very much, Mr. Kiza. To start from the first, I think very simply put, are we ready for robotics? The question is not, are we ready for robotics? The question is the continent ready for robotics? And I'll tell you why I said so. So you see, in Rwanda, you can check it out online. In Rwanda, robotics is already being used in the space of healthcare. And that happened only because of this COVID-19. Now, Rwanda started thinking ahead and saying, okay, so how do we prevent our health workers? Already there's a brain drain within the continent. Medical practitioners and doctors are immigrating to mature systems because of better advantages and whatever. The ones that are here, how do we keep them? How do we make sure that they don't, risk their lives and die? I say, okay, so we're going to get robots. And they actually have robots working within their hospitals. They started with 4. I'm not sure how far they've gone, but that's something that is already being accepted in Rwanda, right? And so the thing is, I cast you back to the earlier slide where I said there are different time zones and spectrum that have been, projected where these things will happen, 5 years, 10 years, 15 years. It's for us to be ready to shift our mindsets to embrace those technologies, because whether we like it or not, these things are going to happen in other parts of the world. And so the question is is Africa going to continuously lag behind, as it has always done for donkey centuries? It's time to flip the narrative, right? And so that's how I'll answer that question. It is existing, not where we want it yet, but we're going to get there. And then secondly, in terms of organizational bureaucracies and stuff, the truth of the matter is, my dear delegates and person that asked that question, we need to always remember that organizations are for profits. They're very, organizations that are not for profits state it clearly. They are for profit. And so from a business perspective, there's certain decisions that are very difficult to make. In the cross cousin between those difficult decisions and those bureaucracies lies, okay, how can we be as objective as possible? I think with what is happening, particularly with organizations now and with the COVID era, organizations are not going to have much more of a choice than to either innovate, die. That's the truth, right? And so it's just something that I think we need to ask ourselves these critical questions, like during the presentation. Moving forward, are we going to adapt to this change, or are we going to fizzle out? It's a classical story of what has happened. I don't know whether you know the Kodak story, but you can read it up, and if you'd also know about the Blockbuster and the Netflix story, you can also read it up. It's innovate or die. So that's what I'll say to save time. Thank you.
All right. Thank you, Dr. Tunde Sarako. Thank you very much for a very good and excellent presentation again. And I think for the interest of time, we won't stop there. And again, appreciate you for the presentation and for pricking our minds and also bringing it home that digital transformation is no longer an option, but it's a survival requirement. And we don't have any option, and we need to do all that is possible to make sure that we adopt and to be able to build our future and also to be more resilient. Thank you very much, and back to you, MC.
Thank you so much for the wonderful presentation, and Mr. Bichetero for the wonderful that you've been able to offer. We appreciate you so much. Dr. Tunde, we say thank you so much. In Kenya, we are used to the Nigerian accent. In Kenya, we have a place called Roysambu. We have Roysambu. It is already a place where we have so many Nigerians, so we can relate with you. We appreciate the wonderful presentation. Thank you so much. Now, I also appreciate everyone who has been able to participate in the questions. Of course, the presentation will pass, and we will be able to learn more and, of course, engage in the best. Based on what has just been done, we have a question. Now, here is the instruction. For them to give us, we are going to award the first person to answer. Here goes the question. Courtesy of our gold sponsor IRA, we have a question based on the previous presentation, and the person who will give us the first correct answer will be able to receive 500 Safaricom airtime. That is 500 Kenya shillings Safaricom airtime. The question is this: name 5 emerging trends in technology as presented by the speaker. Name 5 emerging trends in technology as presented by the speaker. The first person to give us the correct answer on the chat section will be able to receive 500 Kenya shillings airtime, courtesy of our gold sponsor, IRA. Now, we are going to get straight into our next presentation. And
sorry, MC.
The next presentation will be about leadership during crisis, embracing corporate governance, compliance, and risk management strategies. I'm repeating the title. That is Leadership During Crisis, Embracing Corporate Governance, Compliance, and Risk Management Strategies. Now, our paper chair is Ms. Hope Murera. Ms. Hope Murera is the MD ZEPRI. That is MD ZEPRI, that is PTA Insurance Company.
She holds a Bachelor of Laws honors degree from the Makerere University, MBA from IMD International, Lausanne, Switzerland, and an alumnus of Stanford Business School, where she majored in strategic leadership. Wonderful. If I start to say my level of education, I think it will end at the first 3 lines. But of course, having got a diploma from the Insurance Institute of Kenya, and I'm a member now, I can also have bragging rights. She has over 20 years working experience in insurance and reinsurance industry in Africa. She's a mother of 2, passionate about the girl-child education, mentorship, and empowerment of the women in the workplace. Now, she has put in place a young professionals program with a bias on girls. Wow. Through deliberate actions such as this, ZEPRI has achieved gender parity across its ranks, and currently 30% of its management team are ladies. Wonderful. She sits on the board of African Trade Insurance Agency, the Organization of Eastern and Southern Africa Insurers, Uganda Re, and Global Give Back Circle, a girl mentorship and empowerment organization. Clearly passionate about the girl child, and of course, in the process of making better girl children, then of course we'll be able to get awesome wives in future, I believe. But in greater light, of course, I want to welcome Hope. Hope is excellent, a clear definition of what we call brilliance, excellence in the field, passion, and the definition of beauty and brains defined. But before I bring in Hope, I will be able to bring in the winner from the questions. That is Bernard Allo. He responded at 11:47 a.m. So Bernard, that is your time. So if you are so many Bernard Allos, we are looking at one Bernard Allo who responded at 11:47 a.m. Kindly privately send me your Safaricom mobile number and you'll be able to receive 500 Kenya shillings airtime courtesy of Safaricom. No, so courtesy of IRA, sorry. IRA, that is our gold sponsor. Thank you so much for that. And Bernard, of course, after you receive your airtime, you can always talk to me and finish that airtime. Now, welcome on board, Hope. The floor is yours. Karibu.
Thank you, Masters of Ceremony. I will not comment on some of the things you've said about wives. We can have another chat another day. But thank you, Dr. Tundi, for a thought-provoking presentation. It is heartwarming to have an African mind challenge us on that. The CEO of IRA, Mr. Kiptum, the board and leadership of the Insurance Institute of Kenya, fellow insurance practitioners, ladies and gentlemen, it is a pleasure to share such an incredible topic today and participate in a very, very good conference. The topic we have here is of great importance, especially under the pandemic. The topic, as read out, is leadership during a crisis, embracing corporate governance, compliance, and risk management. Dr. Martin Luther King said, the ultimate measure of a man or a woman is not where they stand in moments of comfort, but where they stand at times of challenge. And I do trust that you agree with me that these two twin issues is really what keeps most of us awake at night, especially under the current environment. Governance, you could say, is the moral compass of any organization or society for that matter. I like something I read, that if you treat risk management as a part-time job, you might be looking for one soon for yourself. As a leader, you ignore governance and risk management at your own peril, and we have many examples globally and in our own country and industry to prove this. We all know insurance companies here in Kenya over the last 2 decades that have gone under culprit, poor governance, poor risk management. Ladies and gentlemen, we are honored to have 2 distinguished panelists today to share their vast knowledge on the matter. Our first panelist is Dr. Peter Crow. Dr. Peter Crow is a company director, chairman and international advisor with an extensive record helping boards and enterprises around the world realize their potential. He has served on the boards of private and high growth companies, family farms, and social enterprises. He advises boards, institutions, and governments. He's led direct education courses and spoken and written on a wide range of governance topics. Dr. Crow has a PhD in governance and strategy He's also a chartered member of the Institute of Directors and a member of the International Corporate Governance Network and the Global Heated Tracker Society. A big welcome to Dr. Crow. Our second panelist is a pleasure and an honor to introduce Mrs. Diana Saweta-Noi. Diana is the Corporation Secretary and Chief Manager, Legal Affairs at the Insurance Regulatory Authority. She's an advocate of the High Court of Kenya, a certified secretary and a fellow of the Chartered Institute of Arbitrators. She has interest in corporate governance, regulatory affairs, compliance, and alternative resolution of disputes. Diana serves in various capacities in her professional bodies and is a member with the Global Giveback Circle and the Young Women on Boards Network. Her driving values are integrity, excellence, service, and progressiveness. She's married and a mother of 4. We welcome our panelists, and we'll start off with Dr. Peter Crow. We'll have a presentation of between 15 and 20 minutes, and will be followed by questions. Please do put in your questions online, and we'll try and answer them. Thank you. Welcome, Dr. Crow.
Thank you very much. It's good to be here. I'm calling you from New Zealand. It's the evening here. It's approximately 10 p.m. In the evening. I've been the last 3 days working on a board assessment and had a final dinner this evening. Very, very successful 3 days. So I'm looking forward to sharing some insights with you, and I hope that my comments will be helpful for you in Kenya and from wherever in the world that you're listening from. As the MC said, I was speaking for maybe about 20 minutes. And what I'm going to do now is share my screen, and then we'll get underway. So please stand by while I share my screen. Can I confirm now that you can see MC leading well during a crisis with the chair on the screen? Can you see that?
Yes, we can.
Oh, thank you very much. I just wanted to check that because last time I did a webinar, there was a difficulty with the technology. So my name is Peter Crow. Let's move quickly beyond this. But you have my background and the website is there. The situation that we find ourselves in is not dissimilar to this picture here, which was taken on the 20th of July, 1969, when Apollo 11 successfully landed the US mission, first man on the moon, with Neil Armstrong and Buzz Aldrin. This picture, though, was the culmination of many, many years hard work when President John F. Kennedy in May 1961 mounted an audacious challenge. He said that just 3 months after the US put the first man in space, for them, we choose to go to the moon. And we choose to go to the moon this decade. They did not have the rocket. They did not have the spacesuit. They did not have anything. Man with the US had been 300 kilometers only from the Earth. And here was this challenge to go 300,000 kilometers all the way to the moon. So the challenge here, the journey from challenge to outcome was far from easy. And there were crises. Apollo 11 came after the ones before. Apollo 1, 3 astronauts tragically were part of an explosion and they lost their lives. But the team had to carry on. And that is the underlying context that I'd like to use to speak today. That this very, very serious challenge from the 35th President of the United States resulted 8 years later in this photograph being taken. And many of us remember this, maybe as small boys and girls, maybe as young adults, maybe some of us were not born yet, but this was the challenge. And we remember it because it was significant even in the crises and the challenges and the hurdles that these men and women, 400,000 men and women, achieved this result. And meanwhile, and if we compare it with our boardrooms, because I'm speaking about crises from the perspective of corporate governance and the boardrooms, many of our contributions as company directors and company boards are about as enduring and are about as long lasting as the footprints on the sand at the beach when the tide comes in and they go away. And that is the situation that we have with many, many boards. Just this week, I've been assessing a board for its performance, and we've been reminded many, many times of this pesky little virus. In January this year, this company was going very, very well. It was performing at high levels, and in February also, and in March there was a problem. And here we are now in November, and this virus is front and center. This virus has stood right in the way. And it was interesting to speak with some of the company directors about how they responded, about the chief executive and how he responded. And conducting this assessment over the last 2 days, here are some of the things that were shared as we went through this. The first thing that was shared was from some external people for this assessment. They said that there was overreach, that this company seemed to be more interested in running its customers' business to win revenue, even despite the crisis. Others were saying there was weak engagement and that the board did not care and staff felt aloof. They felt as if they were on their own. There were demonstrations of hubris, and of course, some in the company, as we were told this week, almost denied that COVID-19 would have any impact on their business. And these situations that I'd seen in the past few months as well with other companies. And I mention this because corporate governance and the role of the board of directors in companies is not a paint by numbers. It's a variation on some themes where the role of the board is to provide steerage, it's to provide guidance, it's to help the company perform at high levels to achieve a goal. But of course, that's very, very easy when the sun is shining and the sailing is smooth, and the difficulty comes when there are problems. And so here are some of the problems that this company, it was a large company, it was an export-oriented company, they experienced all of these problems. But I now want to move to how this company started to respond in the face of these problems. So here is the board of directors, and they're sitting here around this table, and I hope you understand. You can see here the first thing they were talking to each other about various agenda items, various things that were on their schedule, and they were running their meetings. And it was easy for them to run processes, and they felt comfortable with those processes and ticking these check boxes. And ultimately, they found themselves almost as a policeman when they were checking the performance of management in the face of crisis. They used Zoom, they used Skype, they used other ways of meeting each other because it was not possible for them to meet in person. But this company was continuing to meet one time per month, these directors, and they were running these things almost as if nothing had happened because they were reliant on management to run the company along the way. And this is what happened from March until August. Accountability fell away. Staff realized that there was problems at the top. The tone at the top had not changed in the face of crisis. The staff engagement went down, the productivity went down, and as you can see, the performance of the business also went down. And if I can draw this analogy, the staff felt as if they were pulling rusty nails out of timber, and they just did not feel supported. They did not feel the structures were there. They knew that things were changing around them, but the board of directors had not changed. So here is the situation. Here is the appropriate question that boards need to be asking themselves in the context of crisis. I weigh that by way of introduction, just to show you, and many of you will have these examples where company directors are aloof, they're distant from management, and when there's a crisis, they react slowly or they react not at all. So the question that I'd like us to explore just for a few minutes today is this question: what is the appropriate role of the board in the face of a crisis? How do boards lead well? How do boards ensure that they provide the oversight, the guidance, and pilot the organization in the face of storms, crisis, and of course, the one that everybody has got on their front of their mind at the moment, COVID-19. I'd like to talk about the responsiveness that boards need to provide. And I'd like to do that in the context of the commonly understood perception of what governance is that's in the marketplace today. Many people think in terms of governance as risk. Many people think in terms of governance as rules, tick boxes. And I also hear governance in terms of strategy and law and legal matters. All of which are variations, all of which are part of the situation, but of course, they're not the whole situation. So I'd like to do this in three ways. I'd like to talk about the problem that boards face in those crisis situations. I'd like to present to you a way that they can perhaps respond to do their job better, and then of course talk about the implications for boards and for companies and for the lives of men and women that are employees of these companies during crises. This is what company directors tell me about their role when they talk about crises. They tell me that they have experts, they tell me that they have training, they tell me they have input from many, many people, and they become confused about what corporate governance is, what their role as directors is, what their role of the board is, and how they should be contributing. So like these three monkeys, they stop listening, they stop watching, and they stop speaking, and the confusion does nobody any good at all. And we know, those of us that have sat on company boards, those of us that know a little bit about governance, that the core role of the board is to make smart decisions. And of course, those smart decisions need to be in the context of what is going on around at this time. So it's no good planning for smooth sailing when there's a crisis, and it's also no good assuming there's a crisis during times of plain sailing. Here are some statistics that may surprise you. This is the first one. Only 1 in 6 directors understand the business of the business that they're currently a director of. So you can imagine that if there's 6 directors of a company or 12 directors or something like this, only 1 in 6 understands that. So that is the business of the business, the trends, the competitors, what products, what emerging things around AI and machine learning. For example, we heard from the previous speaker, 1 in 6. That's a little bit scary if we don't know what the context is and we have to make decisions, and even more so if there's a crisis. And then we add to that, then only 1 in 3 boards can reliably make decisions on really, really big, complicated problems like strategy, like acquisitions, like what to do in a crisis. And these are high quality academic research contributors, academics with extreme levels of board experience. And they're simply saying that many boards simply, and I know it's awkward, don't understand their role. And so this is a negative contribution, and it's little wonder that boards during a time of crisis become confused like those monkeys on the previous picture. Here is the role of the board. The board has to balance 2 things. The first thing is it needs to keep the company safe. It needs to understand the rules. These are the statutory requirements, GRC, but also health and safety, the banking, if it's a banking sector board, the compliance with the banking regulation, my world, agribusiness, technology. So understanding what is required, and did our company and did our management do what they said they were going to do, and did they do that within side of the law, and are they working well, and have we got the procedures and the policies and the practices in place if something goes wrong? That is, if there's a crisis. But that is not all that a board is responsible for. In common law, in the Commonwealth countries, Kenya, Nigeria, New Zealand, UK, others, the board is responsible for the performance of the company, whether it's in smooth sailing or crisis times. And this is the bit that is often neglected, because it's so much easier to ask a chief executive to report on the performance against budget, and so much difficult for the board to sit down and to look forward and to think about unknowns such as what is happening with emerging trends and what the future performance prospects of the company might be. So I'd like to move quite quickly now to talk to you about some of the challenges and responses in terms of the board and management working together to respond better, not only in crisis situations, but also generally. So here, this triangle picture talks to us about those key roles of the chief executive and the operational management within companies. They need to manage the business and make decisions and control and operate the business. And that's management, and that's easy to understand. And of course, from a board perspective, this is governance, and this is accountability to shareholders and supervising management. And of course, the piece in the middle, the overlap piece, is that strategic management. Where are we going? What is our strategy? How are we going to respond? And how are we going to ensure we perform well? Often that's to do with the performance of the company in the future. But this model applies equally in times of stress. What is the problem? How are we going to make the big decisions? How are we going to respond quickly? And are those interventions giving us the results that we need? This model, the strategic governance framework, helps us in times of crisis. At the end of the day, there are 3 things that boards can contribute that will make a difference to the performance of the company and to the company's positive response and strong leadership during times of crisis. And here are the 3 things. What those directors bring, what those directors as a board collectively do, and of course, the behaviours of those directors. And it'll be no surprise that the intersection between these is the difference between this working well and not so well. So very quickly, the capabilities, this is what the directors need all the time. They need to understand the sector, have that expertise around law and accounting and strategy and understand what those crisis possibilities might be. They need to understand the business, communicate, listen, and here is the most crucial one. They need the maturity and the wisdom not to panic in the face of crisis. They need to look at the problem. The second thing is they need to think about, have the rules, supervise closely, and provide that accountability together with the chief executive. This is straightforward when times are good, and it's very, very difficult when there's a crisis situation, because everybody either disengages or they get so close to the problem, they don't think so much about where the company is headed. These are the 5 behaviors that matter for boards if they're going to make a positive contribution in times of crisis or in times of positive plain sailing. The first is here, and you can see those words on the right-hand side. Those directors need to be able to display that capability around intelligence and cognition and have the skills to do their job. The second is they need to turn up. They need to prepare. They need to participate. And in times of crisis, that might mean that the board has to meet daily or weekly. For example, they can't just be going and doing other things like their regular pattern as if nothing has happened. They need to know why they're there, and that at this time, if there's a crisis, it is still the same long-term purpose, but now it's in the context of a short-term problem. Boards need to work together. Do they show the behaviors and that ability to listen, to cooperate, to take the situation into account so that they can make decisions? And of course, in the context of those decisions is are they there for the common good? Are they prepared to hold the chief executive to account? And are they prepared to act almost like a coach for a sports team, as opposed to a policeman that when there's a problem, we're going to have some sort of punitive response, which is going to cause perhaps a negative response from management. Moving quickly and to this final section of the talk is here are some of the things that in practical terms, that type of a model can help boards understand how to perform well in times of crisis. And you can see there those words. I won't read them out at all, but if a board is engaged, that if it's clear as to who is doing what between board and management, they are acting together, not acting individually, and they're committed to working through with management, then there is a better chance of a stronger outcome. And so for that, the board and management, we see many, many best practice guidelines that say that governance management needs to be separate. More modern research, and certainly my experience, is that the board and management need to be together, not apart. That the board needs to understand what's going on, and those 3 things that I've just summarized. I'd like to bring 4 very, very practical questions that company directors and company managers consider to bring a really practical application to this talk and to bind it all together as I now finish. And the first is this: are we, as a board of directors, corporate governance perspective, watching forward for those weak signals so we can see changes very, very quickly when they're still only just starting? Or are we like Kodak, that we have it done to us? The second is in relation to the context. Do we know what our stakeholders want? In a time of crisis, do we know that our staff are happy to work from home or not? Do we know those preferences, and are we attuned, and are we responding well to those? Number 3, time. Are we before the crisis, are we thinking of those scenarios and making plans and strategies as to how to handle them, but when they happen? In New Zealand, 1 decade ago, we had a series of tragic earthquakes, and there was very few planning for those in Christchurch, New Zealand. And companies went bust as a result of that. And lastly, Are we putting resources aside, and are we allocating our resources so that we're good to go when there's a crisis, and that those desired outcomes we want are focused and allocated for that? And with that very, very whistle-stop tour, I'd like to leave you with this commentary here. And this is from a man that lived a long, long time ago. If we're going to change, if we're going to get our board of directors more focused on the future, if we're going to get our board of directors supporting management in times of crisis, we need them not to fight over the way it should have been done, but to exist all of their energies on building that response, on responding well, and on the future outlook and possibility. And that was my key message when I was doing this board review this week, that this particular board of directors, this particular management team was more focused on litigating the past, fighting the old, and they were less focused on building the new. And so I suspect the report they're going to receive next week might have some hard questions in them for them to consider. And with that, I'd like to stop and to thank you very much, and turn back if there are any questions at this time.
Thank you, Dr. Crow, for a very engaging presentation, powerful imagery. Yes, what footprints are we all leaving in the sand? Any questions for Dr. Crow? Please put them up in the Q&A. Any questions?
Oh, there are no questions.
Yes, we don't seem to have any questions from the audience. Thank you so much. We appreciate. I know that you have another meeting. We appreciate your time and the time difference as well. Thank you very much.
Yes, I hope that is absolutely fantastic. Thank you very, very much for the invitation. If people want to speak to me, they can find me on Google and also that website. It's now approximately 10:20 p.m. And I've got an aircraft I'm in a hotel room. I've got an aircraft to catch very early tomorrow morning. So I wish all the delegates very, very well for the conference today and tomorrow.
Yeah, thank you so much. There is one hand that's up. Monene,
oh, okay.
I think. Is that for Dr. Crow? Would you unmute if you have something for him? I did see a hand up.
Denise Munene.
Yeah. Okay. So thank you very much, and Johnny Masses. Right. Yeah.
Thank you.
So, yeah. Our next panelist is our very own Diana Sawe from IRA. Diana, you're most welcome.
Thank you very much, Paper Chair, Madam Hope. And I would also like to thank the preceding speaker, Peter, for the very insightful presentation. I take this opportunity to recognize IIK, the council and all the leadership. I also recognize the presence of the IRA board, together with the commissioner and my colleagues, for whom I'm presenting this paper on their behalf. It's a privilege to present this paper on behalf of the authority, and distinguished delegates, welcome to this presentation. So I will be following up quickly on what Peter has had a discussion on, and IIK will be putting up the presentation shortly as we proceed. But I really was interested in the wise words that Peter concluded with, that we should be working very hard to build on the change, but not to be fighting on what is new. So on my presentation, I will be looking at focusing basically on the recent changes in the law for purposes of the members to understand what changes are happening because when the regulations change, these really impact on issues of corporate governance, compliance, and risk management strategies for insurers and professionals in the industry at large. And so as a way of introduction, we'll just look at quickly why we need to have regulation that is responsive. And we are going to look at it that corporate governance, compliance, and risk management strategies are really key planks for purposes of ensuring that regulation is effective. If the slides can move kindly. So the boards and the professionals are basically responsible for ensuring that regulation is implemented. And this will basically ensure that the company or the industry works in line with the regulations that are provided. And as I've already indicated, the requirements for companies to comply and to have appropriate risk management strategies together with an appropriate compliance structure will ensure that there is good consonance between regulations that are enacted, implemented by the regulator, as well as what the company is doing towards ensuring that the industry is performing and that the policyholders are served at best. On the next slide, we are going to see why do we need to make changes in the regulation. As an authority, basically, we are seeing that these changes are important because, first of all, we need to improve regulation to ensure that we are in tandem with international best practices. Secondly, to see that we are keeping abreast with the changes in our constitution and the laws in the land as they keep evolving. And lastly, to ensure that these regulations are aligned to evolving market dynamics. We have had a very good presentation on technology. Technology is also evolving and dynamically requires that the laws are changed to match up to the issues that are coming up in the market. And so, just as a way of a very high level summary, changes in the Insurance Act that happened in 2019 is to basically introduce matters on index-based insurance. So this was not there in the law, but then essentially what is being presented is index-based insurance will be introduced to ensure that the industry is able to give index-based insurance covers, which can be given and especially will be very helpful for purposes of agriculture insurance and issues that will use indices like weather to ensure that farmers are able to be paid in the event that the weather does not become conducive to enable them get the produce they were expecting in the first place. In the year 2019 also, the Insurance Act was amended to introduce a definition of microinsurance, which was not there before. And this has also been followed with enactment of microinsurance regulation, just to give room for establishment of microinsurance companies in the industry that will cater for needs of maybe we can talk of low income earners in the country who are not able to afford conventional insurance products and to ensure they are able to benefit from insurance products. The third point that has been brought about in the law is expanding the definition of insurance business to ensure that microinsurance is covered as an insurance business under the law, and to as well include issues of social insurance schemes, which then will allow various groups which would want to come up with schemes that will be able to give cover to the group so that the authority is able to provide a safe regulatory environment for these particular types of insurance in the society. The fourth item is about the issue of empowering the commissioner to give directions to insurance groups. Initially, insurance groups were not regulated under the Insurance Act, but looking at the risk-based supervision that the authority has embarked on, then it was thought prudent to ensure that the authority has view of what is happening in the entire group to manage the contagion risk that is coming about by the interrelationship between the insurance company and the other group at large. And therefore, in this case, the commissioner has been empowered by the law to give directions to a group, which may not necessarily be an insurance company as per the law, and also to call for information and be able to check on what is happening between the group and the insurance company. On the next slide, we are also going to proceed with seeing what other changes have happened in 2019. And the next one is to basically improve the flexibility in the law, because initially for where a policy is lost, then the policy holder was supposed to ensure that the loss is published in the Kenya Gazette before they can claim. But now the law has been amended to allow the policy holder to sign an affidavit just to indicate that the policy had been lost. And after that, they can claim for that. So that has reduced the process and improved efficiency in settlement of claims. The next change is about the issue of allowing service by use of mail and other electronic modes. Initially, service could only be done by post through a postal address that would be given by the client when they take up the policy. But now we are acknowledging that technology has changed, has evolved, and as a result, the law is now recognizing and moving in tandem with the times that communication can be done through technology. The next change that has been effected in the law is to empower the authority to settle disputes. We have a new provision where any party is unhappy with the service provided by an insurance company or any other persons licensed under the Insurance Act. They could actually come to the authority, and the authority has now the mandate to resolve that dispute and make a final and binding decision. And as a result of that, then if anyone is not happy with that decision, they can as well go to the Insurance Appeals Tribunal. On this slide, we have the last point, which is about definition of insurance fraud and offenses that are related to insurance fraud. This has been a very challenging issue for the industry, but there was no specific definition on what entails insurance fraud under the law. So the authority thought it prudent to prescribe what these offenses are and also prescribe the penalties for a person who is found liable for having contravened these provisions of the law. And therefore, this is expected to go a long way in trying to reduce insurance fraud and ensure that any malpractices are brought to book, and that the people who have participated are given the necessary measures, and it can also deter other potential criminals in the industry. The last slide on changes to the Insurance Act is the first point is that to update definition of long-term insurance business. This has been unbundled, and therefore we have very clear and increased classes of long-term insurance business, which some of them were bundled together in the previous regime. We also have the second change, which is about the issue of providing penalties for late submission of accounts and returns. Initially, these were not provided, but for purposes of enhancing compliance and ensuring that documents are given in good time for the authority to be able to effect its mandate, then therefore the penalties are prescribed, and these are compounded for any day that these returns or accounts remain outstanding, and the penalties are payable to the policyholders' compensation fund. On the third point under this slide, we have the issue of clarifying the preservation of assets in the event that an insurance company is placed under statutory management. Then the statutory manager is allowed to dispose assets if it is deemed proper for purposes of investing the money and making it give a better return in the place of if the property had been left idle and it would have deteriorated in terms of its value. The scope of the moratorium declared by the statutory manager has also been expanded. Initially, the moratorium was in favor of the company not to pay any claims that arise in the course of moratorium. But now the scope has been extended to ensure that the policyholder who has been sued for that particular claim is also covered by the moratorium. And finally, we are moving on to look at the issue of, sorry, I seem to be losing my screen. And the issue of updating the trigger for settlement of claims by policyholders. And on this one, we have seen that the policyholder compensation fund was initially set in place to pay claimants of a company that is wound up. But this has since been updated because we have noted that the regime in Kenya for winding up an insurance company seems to be taking longer, and that at the end of the day, policyholders may not benefit from the reason why the fund was set up. And therefore now the law is recognizing that the fund can pay in an event where the commissioner cancels the registration of an insurer, or the insurance company is placed under statutory management. So that is the new law that has come up. On the next slide, we are going to look at regulations that have been amended in the year 2019. We have the Policyholders Compensation Fund regulations, which now enable the fund to pay, as I have alluded to in my last point about when the fund comes into place. We also have insurance regulations which have been amended just to clean up and tie up with the change in the law, that now we are not talking about admitted assets and admitted liabilities, but we are talking about capital adequacy of insurance companies. We also have new regulations under the next slide, and these regulations have been enacted in the year 2020, and the first one is about bank assurance regulation. This regulation now gives the scope for regulation, registration and regulation of bank assurance agents, and gives prescriptions on how they will be able to operate and report back to the regulator. On the issue of group-wide supervision, I had also alluded to this earlier, and this regulation gives very clear prescriptions on how the regulator will interface with groups, insurance groups, for purposes of getting information, giving directives, and even assessing the suitability of key control persons in the group. The third regulation is on the issue of microinsurance regulations. We noted earlier that the definition of microinsurance was given under the law, but now these regulations operationalize the microinsurer. In the event a microinsurer applies to the authority for registration, then they have to follow the requirements of the regulations, and the regulator will use the regulations to supervise how that particular microinsurer is operated. On the next slide, we look at the guidelines that have been amended. We have guidelines on technical provisions for life insurance, and these were issued to the market sometimes in 2017, but then having been implemented, feedback was given, and then with the review of the professionals, the actuaries, together with the industry, then this particular risk margin was reduced from 20% to 10% for purposes of calculating or valuing technical provisions for life business. On the capital adequacy guidelines, there was also an amendment to increase the interest rate margin for purposes of capital valuation from 10%, which was initially prescribed, to 18%, just to ensure that the companies are able to comply in a manner that is sustainable for the business. On the next slide, we see the new guideline which was issued, and this is just in line with the laws of the land and international requirements, that the regulator, as a supervisor of the financial services sector, gives guidance to the industry on how to combat financing of terrorism and anti-money laundering. And this is now applied by the industry to ensure that these laws are adhered to. On the next slide, we will see a guidance note that was given by the authority on how operations will be done under COVID-19 situation. This was issued in March 2020, beginning of April. And the general concept behind the guidance was to ensure that insurance companies are able to continue business operations by ensuring succession plans and doing stress tests to ensure they are able to withstand the effects of the pandemic, and just to ensure that their systems are in place to ensure continuity of business in terms of giving service to the industry, even as staff are working from home. The other aspect was also to buffer policyholders and intermediaries against the effect of COVID, where the authority requested that clients be accorded adequate opportunity or grace periods, including premium holidays, to ensure they are able to still keep their policies valid despite the challenges of the COVID-19. some of which included supporting intermediaries also, so that they are able to continue running business in this very challenging situation. On the next slide, we will see that in looking ahead, the authority is also working on various other guidelines which have since undergone stakeholder consultations, and they are in the next phase of being taken through publication, and they will be legislated in due course. And I will request the list just to be run down for purposes of information. And these are already existing, but the purpose of reintroducing or releasing them afresh is just to bring them up to speed in terms of changes in the law, changes in practice, international practice, and also the requirements on the enactment of guidance by the authority to the industry. And with that, I come to the end of my presentation, and would be happy to take any questions, interventions that may be related to this. Thank you very much.
Thank you so much, Diana. Thank you. Can you hear me? Yeah, thank you so much for bringing us up to date with what you're doing. We can see the authority has been busy. Can you hear? Yeah, you can hear me. Yeah. So thank you so much. What the authority is doing in a bid to improve efficiency in the market, adapting to technology, servicing policyholders, and of course the elephant in the room, insurance fraud. We thank you very much, and I'm sure there's lots of questions, capital adequacy and COVID. We'll open the floor. I think there's already a few questions. So there is one question that says, regarding IRA's capacity to resolve disputes, does it mean IRA is the official arbitrator in insurance issues? And the second question that I have, so you could have both of them, kindly expound on the role of the ombudsman and whether clients can still go the legal way and go to court if they are not satisfied with the insurance tribunal's decision. Please keep pushing the questions.
Thank you very much, Chair, for that question. And just to clarify that the new provision on in the law allows the Commissioner to resolve disputes. And this is basically disputes that are touching on the service standards. If any party who feels that the service levels that are given by the licensed entity are not adequate or are contrary to the policy provisions, then they can come to the authority, and the authority should be able to listen to both parties and make a determination on that issue. This does not bar the party from taking any other legal recourse, because legal recourse is a constitutional right, and any party can approach any forum that they feel they would like to approach. But in the event that the policy provides for an arbitration, because most policies have an arbitration clause, then that matter would be referred to arbitration in accordance with the provisions of the policy. Arbitration is a different process which is regulated by an act of parliament, and it is very clear on how the arbitrator will be appointed and how the arbitration process will proceed. So no, the authority is not an arbitrator for purposes of arbitration, but this is a dispute resolution mechanism accorded within the law for the Commissioner to be able to help the parties sort out the issue without necessarily incurring expenses that may come with arbitration. And if you opt for a faster process, if one doesn't opt for litigation. Thank you.
Thank you, Diana. Some more questions there. Further to the communications of March, I mean, I knew there's lots of questions to IRA. Kindly confirm if COVID is fully covered in the WIBA GPA covers. Still not clear. The other question is, thank you for the presentation, Diana. Kindly clarify on social insurance. Does it mean we shall be insuring chamas? And then, thank you for the presentation. Please clarify the role of ACI in giving interim license to insurance agents. And What is IRA doing in terms of making insurers ready to adapt to the uncertain environment, especially digitization? I think we'll just stop there for now and then answer those questions.
The questions are coming in thick and fast.
Yeah.
I see my colleague, Mr. Kalai Musa is here. I may have ambushed him, but I think it is good to also benefit from his expertise and experience, Mr. Kalai. So I will start with the questions I can answer comfortably, and then I will also invite Mr. Kalai to assist me with the other more technical questions. So on the issue of, you remember that when the commissioner started the presentation, he talked about the issue of the Bima Innovate, where the authority has come up with a Bima Lab together with the Bima Box, just to bring about innovation in the industry. And this is something that is going on, and it is one of the flagship projects for the authority to enable people who have ideas to introduce technology to the industry to come together and bring that up. But also the authority has challenged the underwriters or the industry players to adopt technology for purposes of improving on service that is delivered to clients. So in terms of what the authority has done, it is a strategic goal in our plan, and as well the issue of introducing the Bima innovation through the lab and the box. So that is something the authority is really very keen on. On the issue of social insurance, no, these are not chamas, but these are schemes in which probably groups will come together with a view to pool the risk and be able to underwrite it in a manner that subscribes to conventional insurance practices, but then within an environment that ensures that everyone is very well covered, and that the risks that are covered can be settled as and when they become due. So in case a chama has an idea which will really amount or be aligned to insurance, provision of an insurance service, then the authority can look at it and be able to advise on whether this will fall as a social insurance scheme or not. So the regulations are being worked on at the moment, but the concept has already been entrenched in the law, and I believe parties who have that idea can still come to the authority, and the authority will be able to consider and respond on applicability of that. And I will like to invite my colleague, Mr. Kalai Musa, on the issue of ACI issuing the license to underwrite to the agents, and the issue of, yes, that is the issue. Mr. Kalai, over to you. Session chair, you may advise if there's a question I've left out.
Yeah, that's okay for now. Thank you. There'll be more. There are many more coming, but we'll hear Mr. Kalai then.
Thank you, Chair. I think it's true at the moment, ACI issues what we call provisional licenses for insurance agents. And they usually do that and delegated authority from the authority. I think it's basically an operational convenience which came up when the introduction of COP, Certificate of Proficiency for Agents, when it became a requirement that any agents must have a COP before they can be licensed. There were questions of operations. If an insurance company recruits agents today and trains them, and in the process, during that time, they sell policies. Are those policies legal? Are they being sold illegal or illegally? Ideally, without a license, then the business is illegal. So that's why ACI was given that authority to provisionally, during that time when the agent is in training, within 1 year, to be able to give them a provisional license to just ensure that whatever they sell during that period is not constituted to be illegal. So it just purposely for that, it's delegated authority. That's what has been happening. Thank you.
Thank you, Kalai. Over to you, Session Chair.
Thank you, Kalai. A number of other questions. What is IRA doing in terms of making insurers ready to adapt to the certain environment, especially digitization? I think you touched a bit on it, so you might want to elaborate. There is more are the laws that were initiated in 2019, part of the laws that were disputed in the Senate or Parliament. If so, what will be the way forward? And what shall happen to insurers who are not fully capitalized towards the end of the year? Over to you, Diana.
Thank you, Session Chair. So I will address the issue of the laws that were affected by the High Court ruling on the Senate case. So one of the laws, the Insurance Amendment Act of 2019, was affected, and this is one of the laws that was actually making presentations. I had mentioned the issue of penalties for returns, as well as the issue of statutory management. The court, in making the decision, found that there had not been adequate consultation between the two houses, but the court was wise to indicate that that particular order had been suspended for a period of 9 months to enable the two parties confer and regularize the position before the order becomes effective. So as we speak, all the laws are in full force and effect, and that order by the court was suspended automatically for 9 months. And during that period, it is believed that the Senate and the National Assembly will have conferred, and they will agree on a position which will now make the laws effective. But for now, nothing has been affected, and the laws are applied or implemented as they were enacted. I will request Mr. Kalai to come in and address the issue of the risk-based capital and uncertainty in the times of COVID-19 pandemic. Over to you, Mr. Kalai.
I think Mr. Kalai can also answer the question of the next one that says we don't have data. How come we don't have quota insurance data for 2020? You could answer that, Mr. Kalai, as well as filing of returns. The system has been down. IRA should not penalize underwriters when this is an issue. And how is IRA planning to protect brokers to stop these direct business issues on Government of Kenya business? Thank you.
Oh, okay, thank you, Chair. I think I'll comment on those questions. On the issue of the risk-based capital, as we know, this is law which came into place 5 years ago. And we have been requiring insurance companies to comply with that law. For the last 5 years, we have actually been talking to companies, requiring the action plans towards compliance. And many companies have actually put measures in place to comply. Now, the complication came in because the implementation was due by 30th June 2020. But with the advent of COVID-19, we got many requests actually from companies saying that give us some more time because of COVID, but people could not even meet to make some decisions. Monies could not be moved because of some issues of COVID. So the authority allowed an extension to the implementation of that law. That's how the Gazette notice for up to 31st December came into place. So even as we are talking today, we are actually talking to those companies who had not complied by 30th June. We are discussing with them how they are going to comply so that by 31st December, we have everybody complying. And if they do not comply, of course, there are provisions in the law and the regulations on what happens. There are processes to look at. Remember, this law applies what we call the proportionality principle. Actions are taken depending on the non-compliances. So you look at every issue, and the law provides for that. If you are not compliant, we look at how serious the non-compliance is, and there are measures that will be put in place for each case, depending on their particular issues. That is how the law is applied. About the availability of data, Actually, I think the person asking the question may not have gone to the website this week, because now all the data is there already. It's in the website. But the delay was again basically because of COVID-19. Because of COVID-19, several companies again could not submit their data on time. And we gave an allowance, we gave extensions for submission. They have now submitted, the reports are actually in our website. Then I know that there is an issue of system being down, and I don't know when this is, but the issue is we will not penalize anybody if issues are from their system issues beyond the control of all of us. I don't think anybody will penalize people because of that. So, and you always discuss with each company on issues like that when they happen. I don't know whether there is another question which I have not answered. Thank you, Chair.
Yeah, I think the direct business, government of Kenya.
Direct business, sorry, Chair.
It's like, how is IRA, it's an interesting question. How is IRA planning to protect brokers to stop these direct business issues on government of Kenya? Yeah.
Okay, Chair, I think that's not a very easy question, because you can't force clients on how to do or how to procure their business. Clients are free. If they want to go directly to underwriters, they are free to do that. It's their right. If they want to use intermediaries, they can do that. So it's very hard to force clients and tell everybody you must go through a broker. However, as an authority, especially for government entities, we've actually given an advisory to government entities on how procurement can be done. In fact, we've been doing training. We have trained all the counties on procurement of insurance business so that they can understand the importance of using different parties or different entities in the process. If it's brokers, agents, we have taken them through that training to understand the role of each and every party in that process. So as an authority, we have taken that initiative of training them so that they make informed decisions as they procure their business. Thank you, Chair.
Thank you very much. We've come to the end of our session. Thank you, Diana. Thank you, Kai. We are grateful to the authority for all they are doing, the board and management of IRA. Our industry still has a long way to go, but we do appreciate the efforts you're putting in. So thank you so much, everyone attending. I think it was a very engaging discussion, and look forward to the rest of the conversation. Thanks. Back to MC.
Thank you. Thank you very much. We sincerely appreciate. And it's been awesome for both presentations by Peter and Diana. I noted that after Peter's presentation, we did not have much questions. I believe we were still absorbing the English. For now, we will be able to have a short video from AAR Home Insurance Cover, after which we will get to the winding up session of this first day of the conference. Welcome. Thank you so much, AAR, for that. Excellent service, of course, noted. At this time, I want to remind us that tomorrow will be another exciting session. We will have 3 presentations. The first one being on expanding markets to attain growth, fintech global market opportunities and strategies. Then we'll have another one on winning the customer experience battle, increasing growth and profitability in the insurance industry. And finally, we will wind up with coping strategies for individuals during COVID-19 crisis, mental health. I want to thank all speakers for the wonderful time they've been able to share with us. We will, of course, have a vote of thanks at the end of it all. Just a reminder that you need to tweet whenever you're tweeting, and just tag hashtag IIK Conference 2020. You never know what will come with that one. I can assure you, whenever I tell you to tweet on something, don't take it for granted. It's going to be one blessing in disguise. So make sure that you are able to tweet on that tweet, and then you tag hashtag IIK Conference 2020. And then, of course, you can take a selfie also. You can tweet a photo of yourself having this experience, and let's share and learn. And of course, we are going to be collecting feedback on the same. Now, on the chat section, there is a link on the feedback form. There's a link on the feedback form. Kindly make sure that you're able to pick the link. And once you're able to click on that link, you will be led to a form. Let's have your feedback to make your experience better even tomorrow that we'll be having. I wish to also go back to our sponsors one more time. We'll start with gold sponsor, Insurance Regulatory Authority. Thank you so much for being our gold sponsor. Don't rest easy there, because as we said, it is likely that there will be more coming into that category next year. So I believe there could even come a section called Super Gold. That is where you can take the opportunity again. Thank you so much, IRA. We have the silver sponsors, that is Africa Re. We say thank you so much for being a silver sponsor. Of course, we will be able to back to getting to a step higher and going to the gold section. Thank you so much, Africa Re. Thank you also to Madison and AAR. Those are the other silver sponsors in this category. We say thank you so much. Of course, we will also appreciate our bronze sponsors because of your excellent input that you've been able to put to us. The categories are classified that way: gold, silver, and bronze. For our bronze sponsors, that is Waikari, Sanlam, Zebri, the Monarch, CIC. This is Geminia, Direct Line, Kenya Re, Jubilee, APA, Kenyan Alliance, Minet, First Assurance, Old Mutual, and Fast Tree. We say thank you so much. And of course, in the spirit of growth, we need to move from the crowd and to these categories that have fewer people there, and we keep growing together. Thank you so much, our sponsors, because we appreciate you for being here. For those companies that have supported the conference with their delegates, and you allowed us to have your delegates today, I want to give you a special mention. So we want to say thank you so much to all these companies: the AAR Insurance Company, Africa Re, Aki, APA Group, CI Corporate, CMA, Direct Line, First Assurance, Tree. We also have, we have Geminia, Grasavoya, ICEA, Intra Africa, IRA, Jubilee Group, Kenya Orient, KenGen, KCB Insurance Agency, that is Kenyan Alliance. We say thank you so much for allowing your delegates to be part of this. We have all those who've been able to send their delegates. We say thank you so much. We also have Cusco, Mutual Assurance, Laser Insurance, Leo Simba, Liberty Life, Madison Insurance, Majani Insurance, Mayfair, Minet, Ashes, Pioneer. I don't know whether we have any other group that I may have left behind, because you know the market is small. and you never know where I could be needed next, and I failed to mention them today. Then you have UAP Old Mutual, RBA, Sanlam, The Monarch, Kaful, Waika, Samara, and Zepri. We say thank you so much for sending your delegates to also participate in this conference. As we said, these presentations will be shared to you so that you are able to have an in-depth understanding and analysis of the content. And in case of any questions, I'm sure most of these presenters have their links and LinkedIn profiles. You can chat them up and get confirmation of any details. So at this point in time, I would wish to bring our last part of the program. We are going to bring in the Convener Legal Affairs and Professional Standards, that is Mary Wanga. She's going to lead us in the vote of thanks and of course the closing prayers. From me, MC Okari, I say thank you so much for joining us today. God bless you. We'll meet again early tomorrow morning. Thank you, Mary.
Thank you very much, our MC, Mr. Kevin Okari, our chief guest, IRA Kenya CEO and Commissioner, Mr. Godfrey Kiptum, our IRA Chairman and Board of Directors and the officers of IRA, Regional Commissioners, Madam Grace Mohammed from Namibia, our hosting director, Mrs. Agnes Masharia of IIK, CII Director, Mr. Lawrence Smith, our immediate past director, IIK, Mr. Birian Akwil, College of Insurance, all eminent speakers and paper chairs, IIK Executive Council, participants, CEOs, insurance companies represented here, brokers, agents, other distinguished guests, all protocol observed. Ladies and gentlemen, good afternoon. My name is Mary Wanga, as you've been told, EC Executive Council member. It is indeed my privilege and great honor to have been asked to move a vote of thanks in this great auspicious 35th annual virtual IIK conference. I would have, of course, asked you to join me in a big round of applause for the speakers and the paper chairs, but we are gathering, ladies and gentlemen, in a very unprecedented times that requires unprecedented approach due to the COVID-19 pandemic that has necessitated of the normal physical meeting. I now stand between you, I know, and your lunch, even though this time round, we are not able to physically meet together and sit on a round table and have lunch. But before I let you go, I will be failing in my duty if I do not thank everyone and each one of you who has actually helped in putting together this conference and making it a success today. My appreciation, of course, goes out to the convener, Insurance Institute of Kenya, led by Madam Director, Mrs. Agnes Macharia, and the Executive Council team for affording us this opportunity to learn and share knowledge and experience, and specifically having come up with a theme that resonates very well with the current situation in our country and globally, and for identifying high-level intellectuals to facilitate in this conference. I therefore take this opportunity, ladies and gentlemen, to appreciate our regulator, IRA Kenya, the Chief Executive Officer and Commissioner for sparing his time out of his busy schedule to grace this conference and share his wisdom and thoughts concerning the insurance industry. Please feel most valued and appreciated. Special thanks also goes to our eminent speakers, Mr. Charles Etemesi, Mr. Tunde Salako, Dr. Peter Crow, Ms. Diana Sawe Tanui, for their wonderful and well thought out presentations and accepting to grace the conference today. We want to thank you very much for sharing your knowledge, expertise, and experience in today's deliberations. We highly appreciate your contributions and insights. And of course, we are taking away from this session what we have learned. We also want to thank you, not forgetting the paper chairs, Ms. Caroline Munene. We are also thanking Mr. Bichetero, I hope I'm pronouncing it well, Kiza, and Ms. Hope Murera for facilitating the discussions very well. A very hearty and special thanks to the publication team, the ICT support team, both at IIK Secretariat, and of course, the venue where it is being hosted from, Pan-Africa Hotel, for playing a very critical role in hosting and enabling us to be together today. To all our sponsors of this conference, this would not have been possible without your resourceful and valuable support. Finally, a big thank you to all the participants who have enthusiastically participated in this conference and for taking this dialogue and having very productive discussions. It has been an inclusive, very engaging and fascinating and interactive session. Thank you very much. So finally, may I request that we all end this session with a word of prayer, and I will proceed to pray. Our eternal God and our Heavenly Father, what a privilege it is once again to come into your presence with hearts full of thanksgiving. We praise you, bless and honor your holy name. Indeed, we are faithful and you have always been merciful and loving God. We want to thank you, God, for granting us this day and for favoring us to host this conference and enabling the participants and all the stakeholders to be able to participate and make contributions in one way or another. We want to thank you, God, for the wealth of knowledge and wisdom that has been shared out in today's learnings and for what we are taking over for all the glory of your name. We want to thank you, Lord, in the mighty name of Jesus Christ. We thank you for this great country, Kenya, and all our leaders. Father, we pray that you may continue to guide us and divinely protect this country. In the mighty name of Jesus Christ, we pray and believing and trusting in your name. Thank you. Thank you. Back to you, MC.
Thank you so much. We appreciate you. The vote of thanks has been tops, and it reminds me of the many functions that I attend, and somebody is given a vote of thanks and they immediately start by thanking the person who served lunch. I believe you missed that because we are about to go and serve lunch right away. So all delegates, we want to appreciate you for having participated in today's session. We are going to leave you with some videos, some adverts from our sponsors. Please get to enjoy them. Don't log out immediately. Get to enjoy part of those videos. And we will be glad to have you again tomorrow, same time in the morning, ready to learn more and grow and get better. Thank you from our side. We are glad to have you. Thank you so much.
5th and 6th. Don't miss.
5th and 6th. Usisahau.
5th and 6th of November.
5th and 6th.
Either no, either that too.
5th and 6th.
5th and 6th. Tupatane hapo.
5th and 6th.
5th and 6th. Tarehe 5, 6.
5th and 6th.
Tarika Beach, Tarika Wichel.
Niaje conference ni 5th and 6th. Msihate, msikose, msimiss. Sawa?
5th, 6th.
Taliki 5 nadhani tu.
So, 5th and 6th of November. See you there.
5th and 6th. Please register, log in, see you there.
We look forward to seeing you all on the 5th and 6th of November 2020. Please log in to the first ever IIK virtual conference.
My name is Gidua Garuya, Managing Director of Madison Life Assurance Kenya Limited. We all know that the world has changed due to the COVID-19 pandemic. Our lives have been affected in one way or another. For those of us who have lost loved ones, those of us who have lost livelihoods, and even those businesses that have had to close down, my thoughts and prayers are with you. We are a resilient nation. We are strong, and we will get through these tough times together. Madison Group is a locally incorporated financial services company. We specialize in life assurance, general insurance, and investment management. We started our journey in 1974 as Crusader PLC and changed our name to Madison Insurance in 1988. We have operated as a composite company up until 2018 when we demerged. At Madison, we strive to provide life without worry for our clients through the education policies, investment products, retirement planning, life cover, healthcare, and general insurance products. Thanks to Madison Life Assurance, over 160,000 individuals live a life worry-free through the products that we provide. The client is always at the heart of our product planning. We've developed products for each stage in life, from primary school secondary school, university, during the working years, and even retirement. We have abided by the Ministry of Health guidelines on social distancing and wearing masks in the workplace, amongst other measures. Our staff now work in shifts and others work from home. This has accelerated our need for a digital transformation to ease access for our clients who are currently at home. With the new norm, our clients have been reaching us from the convenience of their homes through our USSD platform, website, and Madison app, where they can access our products to get a quotation, pay premium, make an investment, or view their statement. As a locally incorporated company, we understand the client's needs. Our clients at the heart of everything we do, from product development, process re-engineering, and our open door policy where we are accessible to each and every client. We'd like to thank all our customers, from individuals, SMEs, and corporates. We are grateful for our partners, brokers, agents, suppliers, and also IRA, our regulator, who has been at the forefront and championing the growth of the insurance industry, especially during this tough time. Welcome to the 35th IIK Annual Conference. This is our first ever virtual conference. Let us engage, interact, and encourage one another. Thank you.
And 6th November. Kwani kuna nini?
Nancy, you don't remember the long-awaited Iik conference?
I'll be there. Guys, let's go.
Hata mimi siwezi kosa. Lazima niambe my friends wangu wakam.
Hiyo niko ndani. Siwezi kosa.
Jerusalema ikayalami ilondoloze uhambe nami zungangishilana Jerusalema ikayalami ilondoloze uhambe nami zungangishilana dawo yami ayikholana buso wami awukholana ilondoloze
I am AIK Agnes Macharia and a holder of the Advanced Diploma of Insurance from the Insurance Institute of London. Now I would wish to introduce the Insurance Institute of Kenya. The Insurance Institute of Kenya, IIK, is the umbrella body for all insurance professionals in Kenya. It was formed in 1948 as an affiliate of the Chartered Insurance Institute of London. IIK's mission is to enhance insurance professionalism through training, examination, certification, and research. IIK's vision is to be Africa's leading insurance institute. The Insurance Institute of Kenya exists to promote professional standards in Kenya by admitting those who attain insurance qualifications. IIK admits holders of insurance diploma from the Chartered Insurance Institute of London and also the diploma from our very own College of Insurance. However, the Knowledge and Development Committee of the Insurance Institute of Kenya is working on the standardization of qualifications to extend our base to other insurance qualifications. What is going to happen is that if we have those who want to be admitted, the committee is going to look at any gaps which may be existing in that qualification that will be there. That gap can be bridged at the College of Insurance. IIK ensures that insurance professionals are continuously developed and that they uphold the set standards of professionalism. However, ensuring that the set standards are adhered to has been a tall order since IIK is not legally recognized, and this has made enforcement difficult. However, all is not lost, and the Insurance Professional Bill is now in Parliament, having undergone its first reading in September this year. Once enacted, IIK will be in a position to discipline errant members, which will enhance trustworthiness, discipline, and accountability in this insurance market. This will increase public trust, which will translate into the much needed increased insurance uptake in this industry. The sitting executive council, which came in this year in 2020, has got a vision. And the vision is for IIK to be the preferred solution providers for insurance professional continuous development needs. This will be achieved through listening to its members, feeling their heartbeat in order to understand their diverse needs, and thereafter deliver timely solutions in a way that will add value to what they do. On 30th September 2020, IIK, in partnership with the IRA and in collaboration with CII London and IIB Kenya, delivered the first virtual stakeholders and insurance executive workshop. On behalf of the IIK Executive Council, I take this opportunity to thank all the delegates who attended that forum. Those who are not able to attend have an opportunity to upload from the IIK website. I now want to take this opportunity to invite each and every one of you to attend the IIK Virtual Annual Conference of this year, which will be taking place on the 5th and 6th November 2020. It will be a half-day session each of those days. I can describe this year's IIK Virtual Conference as an all-round conference because it will cover the impact of COVID-19 on insurance business. And this will be presented by Mr. Charles Etemesi. The other paper will be on surviving COVID-19 through digital transformation and creative utilization of data and virtual spaces, which will be presented by Dr. Tunde Salako. The other paper, the leadership paper, it is entitled Leadership During Crisis, Embracing Corporate Governance and Compliance by Peter Crow. And the compliance bit will be done by Diana Sawe of IRA. Then we'll have another paper on expanding markets to attain growth, fintech global markets and strategies by Mr. Richard Liftrey. And then we will also have a paper on winning the customer experience battle, increasing growth and profitability in the insurance industry by Dr. Lucy Kirothi. And finally, we always have a takeaway for the delegates for the day. And that takeaway for the delegates will be on coping strategies during COVID-19 crisis. And this one will talk on mental health and self-motivation strategies. And this will be done by Dr. Susan Muriungi. Therefore, it is all round. We will be looking at all areas. As an insurance industry, we are concerned about our business. We are concerned about the marketing. We are concerned about the leadership. You know, this is a very difficult time. We know the leaders are trying to work during crisis, and we will be able to put this on the table. We will be having a mixture of eminent speakers, as you have heard, locally, from the region, and internationally, to ensure that nothing is missed. And we have a no-inclusive conference which will be taking care of everything. These speakers are passionate and they have practical experience in the areas which they will be discussing. We have interacted with especially the international speakers through the webinars just to have the feel of them. And I can assure you, I could hear their passion on the subjects in which they will be discussing. And therefore, I take this opportunity to welcome you all. No insurance professional should miss this year's Insurance Institute of Kenya virtual conference. Welcome all. Welcome. Thank you very much.